Hi, good morning everyone. I welcome you all to the setting up marathon. Now today it was planned to take GST, but what happened is in my last two sessions only I covered a major part of the entire GST marathon and all the topics of GST was covered. So in case if you missed that, you can go ahead and watch it. Today I will be starting with setting up. Now remember one thing, that setting up, when I'm starting, I will tell you which all topics I'm going to cover beforehand. I mean, in today's lecture only I will tell you, it will be more than enough to get an exemption. Okay. Now before I start, I want you all to put in the chat box whether I'm audible and visible and everything is clear and we are good to go. Okay. So let me tell you what is the plan for today. Okay, 2 minutes. Now every day for the next 3 to 4 days, I will be coming around this time. I will yes, I will be telling Nikhil, don't worry. So from now till the particular next 3 4 days, I will cover a major part of your setting up subject. And remember one thing, that when I cover a particular chapter, it is totally in depth. You can keep your module with you in 3 4 hours. I don't take for too long lectures. In 3 4 hours, I will finish a lot of important chapters. Okay. So let me tell you the plan for today and how we are going to how I have structured my entire marathon. Okay, I have planned it in depth with extreme amount of preparation beforehand, which I will show you, which will be very easy. Even if a student has not studied anything, they will be able to clear the setting up paper. Okay, so firstly, let me tell you that the marathon is also going to be on, I mean, the certain chapters I will do today and certain chapters I will also be doing on these dates. Okay, this is for the setting up old and new syllabus students. Okay, so both I will be doing. Now first is, also I have created a dream batch. Many of the students, hundreds of students, approximately 500 students have already gone and got the dream batch. If you have not got for the dream batch, or your friends has not got the benefit of dream batch, the link is given in the description of this video. Please go ahead and subscribe. It is an access to the lectures which you can watch. I can't put everything on YouTube even for a short time, so I have given it in the dream batch on a nominal price of rupees 99. Okay, this is just like a free batch only till the exam date. Now that you can watch it on your mobile phone as well as your laptop. Okay, and unlimited views. Even one day before the exam you can watch through everything. If you're panicking, you any chapter is left, you will go ahead and watch it and finish it off. Okay, so this will is a big benefit to all the students. Your job is to inform your friends. Any students from South India or any other students who were self-study missed out, it is your responsibility. I'm trying my best to reach all of you all. Now I will be starting with the hacks to clear the setting up paper. Trust me, I have done this setting up book in and out, and you have seen in my past marathons also, in 4 days, 5 days, I finished the full subject in depth. Okay, it is that simple. Okay, but I will give you some tips which you can note it down. The very first hack, okay, now it differs a little for the old and new syllabus students. Pay attention. For the new syllabus student, industrial labor laws has been given as 40 marks. 40 marks has been added. I have taken it beautifully. I can guarantee you not a single question or topic will come outside. I have put it in the dream batch. I have given it to the students, beautifully edited, recorded. It's there. Go ahead and study and finish it. Even for the old syllabus students, the labor laws is there, but not for 40 marks. It comes for around 15 to 20 marks. So still you can go ahead and study the labor law because it is super simple and you get full marks in it. Okay. The access is given in the dream batch to these lectures. You can go ahead and study it. First hack is that. Second hack. Now for the old syllabus, all students pay attention. You have to study your part C first. Then you will come to part A important chapters and then part C. Part C has to be perfectly understood. Every single topic has to be done. Dream batch is there, you can study it from there. Part A is where I will come to help you. Part B also I have added up labor law, everything I have given up. These sessions which I am going to do in the next few days is going to break down your part A into and make it a baby topic, where whatever I take, not a single topic or chapter or concept will come outside. So hack 2 is also your part A. Now I understand for students part A becomes very difficult because very bulky. So I have come in to help you out with the part A important topics also. From these topic, now only this chapter is newly added in new syllabus. Rest all chapters are common. Okay. Now from these chapters alone, around 40 to 50 marks will come in your exams. This is a guarantee. 40 to 50 marks, okay, will come around from these particular topics. Okay, for the new syllabus students also, you see around easily around 40 marks, you will see 35-40 marks coming out from here. Now in this, let me tell you what all I will be covering in the marathon, today's marathon, tomorrow's marathon. All I have scheduled it and I will explain. So just give me 5-10 minutes, I will explain the flow so you can start attending accordingly. Okay, now one thing is, sir, in Dream Batch part C videos are not available. Nikhil, don't worry, part C videos also I will be taking in my marathon, don't worry. Now let's come to setting up paper. In setting up, types of company is there in corporate entities. Today I will be doing this for sure. Okay, this particular topic, it is a 11 marker chapter. It is a 11 marks short chapter. Now pay attention to what I'm going to tell. Okay, this particular chapter is not only there in part in your setting up paper. Now pay attention to what I'm saying. This is there in your company law legal status chapter I'm covering, and lesson 2. So in today's session I am covering with one stone I'm going to kill 2 birds. That is, I will cover, you can keep your company law module open and you can keep your setting up module open. In that, there is a topic called as type of companies, corporate entities. Both I will cover. In company law also there is this topic called as types of companies, and even setting up it is there. I will be doing in depth so that I've gone through both the things. All the concepts will be added in this lecture only. Okay. So this will be done not only from setting up point of view, but also from your company law point of view. Okay, and lesson 2 and company law also lesson 2, setting up also lesson 2. I think it contains your types of companies. Okay, you can just check it where it is there. Today's session will be that. Then all these you can take a screenshot. Then students, another, so I'm covering big topics with chapters which have a huge weightage in your exam and students find it very difficult. Okay, in this also if you go to see, there is a topic called as Nidhi companies, foreign companies. Students think company, types of company I know. You know what a level of questions are coming in the exam. You know how much depth you need to know. So don't worry, I will cover it. When I cover it, nobody can ask outside. Okay, all sections, subsection, forms, you have to give me 3 hours of yours and I will cover major topics. The next topic also I will be covering is your financial, not today. Okay, once I will finish this, then I will take the other one. But in the series of my marathon, tomorrow, day after, all this, I am also going to finish your financial service organization. Oh God, it is a topic which comes for 8 marks. Okay, 8 marker topic which is there, which students find it very difficult. It is a very easy topic, but I will teach it to you all in this marathon on YouTube live. Okay, then there is another thing which is a short 6 marks question. So this has always been coming for at least 6 marks in your exam. That is your conversion of business entity. So all this I will definitely be covering. Even LLP is there, I might cover this also. It's easy topic, but 5 marks comes from here. Okay, so this is also 5 mark topic that I will be covering. So you see, around substantial part of your syllabus will be covered by me in the marathon. The screenshot you can take of the important topics. Is this clear? So in today, tomorrow, day after, whatever in the series I will be taking, these chapters will be covered. Now expect for 50, at least 50% of your entire part will be covered from here. Then you will notice one thing that I will be doing setting up, okay, setting up with company law. You have to keep your both modules, and when you are studying these two subjects also, they are overlapping. Sir, please explain. See, what happens is types of companies there in setting up also, so many times it comes here and there. They call it registered company. They call it every time you will see in setting up private company, public company, OPC. Even in company law, you will see private company, public company, nidhi company. They have mixed match everything. I have made one lecture today where I will cover everything. So any type of company, whether it be a foreign company, favorite examiner question, whether it be Nidhi company, favorite examiner company, all I will cover today. It comes for 11 marks in your exam. Okay. Now this is there. So both I will be doing, setting up and company law, whichever are overlapping topics. Okay. Can you give my watch? Next is revise company law sections. So all this I will making you all do. All I need is a book and pen with you all writing it and you all completing it with me. Okay. Now the next thing is also your hacks, that your setting up paper comes with a direct questions also, and they come with situational based questions also. How to attempt situational based question also Fatima ma'am has taken in the dream batch, it is there. You have to, in short I will tell you, situational questions are to be presented. What is a situational? They will give you Arun, a shareholder of so and so company, has been doing this. Now what is your opinion as a company secretary? It's a situation, and then you have to present it. Your presentation will always be, this is the institute's favorite presentation. Okay. Facts of case, issue involved, provision of law, and conclusion. All of you all will write in this flow only. Clear till here? Then, sir, all these things I have already given in the JT scanners. It is freely available in our app in the free study material section. For every single thing, you can go and study it. All the past questions are given, no doubt. Exam questions are given, but model answers of ICSI is given, where you will pick up ICSI guidelines and study. I have taken the ICSI guidelines, presented it in chapter wise order. So when you finish a chapter, you can study the questions of the past exam with the model ICSI answers. So that is called as JT scanners. I have already put it in the Telegram group. However, you can now go and take it from the free study material section of our app. Clear till here? So I am done with the hacks. The hacks are super simple, that company law and SBEC has to be thoroughly done, and marathon and these things will be clearly done. Now let me just tell you, just in case is students wanted to know which all topics I will be covering. So the hacks are super. Okay. Now let me tell you which all I will be covering. So from your company, I mean MOA, AOA, let me write it down in this, what I will be covering. Okay, so this will be the sequence also of which I will be covering. First is your types of companies. Now types of companies there in company law as well as setting up. It will be done from combined. So one chapter, one video, both from both chapters from both the modules are done. Types of company. Then there is a topic called as MOA, AOA, and alterations. So this will also be done. Third is they ask about incorporation. Incorporation of companies also is a subtopic only. So this will also be done. With this, with alteration, and also comes your doctrines, which they ask. So this is also 8 to 10 mark chapter. Even this is a 11 marker chapter. Okay. Incorporation also comes for 4-5 marks. It will be a short topic. Then I am also going to cover your this is of company law. Let me tell you of setting up. Okay, setting up, conversion of business entity, and so your conversion of business entity also I will be doing. I'll try to go in this flow only. And your most important financial service organization. This is also 8 marker topic, financial service organization. For the in EBCL old syllabus, which is there, I have already put the FCO in the dream batch. You can study from there. Now, more topics also I'll try to cover, like your LLP. These are all small topics. In 45 minutes, I finish the subject, the chapter, okay? Setting up, then I will also try to do some titsy bitsy chapters here and there. But these are your major chapters, okay? So here also these non-corporate entities will also get done. So is this clear? This is my setting up marathon flow, okay, which I will be covering. Any particular chapter which you feel apart from this also I should add in YouTube? Every chapter won't be available on YouTube, obviously, okay? It cannot be covered. I will be putting in dream batch that you can see. Now you tell me if any other chapter in setting up which you're finding difficult, okay, you can put it up. I will read it later, what all comment section you have. I will read it up, but these chapters I will be covering in my marathon. So if you see these marathons, just for 4-5 days, for 3-4 hours, you sit, around 35 to 40 marks of your setting up will be done. Easily, minimum 35 to 40 marks will be done. Even 1-2 more chapters I was thinking, conversion, startup, LLP, I think it's mostly done only. And everything else is there in the dream batch, okay? So setting up and identifying laws, okay? Setting up and identifying laws of outside India. Clear till here? So now I will be starting with the types of company topic. Now before I start, is everyone ready? And is there any other chapter that is giving you difficulty? Put it in the chat box. I will read it. Part B, important chapters. It is given in the dream batch. You can study from it. Startup chapter. Okay. Startup also I put in the dream batch. You can read it. I'll see, because the chapters which I'm taking are very, from which I have told here. These chapters which I have told, this is a sure shot and very easy. And sometimes there is an update also. So I'm covering this. Rest all I will see if it is possible, but these chapters will be covered in the next 3 to 4 days, okay? And thoroughly, I want you to keep your company law module also open and your setting up module also open. And whenever I tell you all a particular topic or a section or a case law that I've discussed, you write it down. Setting up paper will come for 5 marks. Question will come if you know the concept, you've written it down, you can write in your own English and elaborate also, okay? So good to go. Can we start? Yes or no? Can we start? I need a thumbs up from all of you all. Here I'm covering 2 topics. One is in your setting up lesson 2 and company law lesson 2 of the new syllabus. It's basically types of companies that I'm covering. Yes or no? I'm waiting for your chat box. Okay, everything clear, good to go, great. Okay. Unicorn, startup, okay, great. So I'll see startup also if it is possible. I will take you all through that also. Otherwise, in the dream batch, it is given in depth. Okay, startup has been given in depth. You can study from there also. Okay, so let's begin. Okay, just keep your book, pen ready, and I will start on this. Hi, so we'll be starting with the types of companies. Now, types of company is very important as a professional to advise the clients which type of company or business structure they should create or form. For that, we need to understand the features in depth of each type of company. Now, if we see the basic meaning of the term company, now company, the origin of the word comes from the word companies, okay? Now, which mean come together, we will have bread. Now, what did that mean? It meant that over dinner they used to discuss business, and that is why they called companies. Okay, come, we'll discuss it over dinner. However, this is just the origin from the Latin word companies. Now we started to understand company is a structure which does business. Now the word company came from the Latin word come, which means together we will have bread. Okay, but now this the actual meaning has lost its relevance. Company now we know is a business entity. But now we have to go to the Companies Act 2013 to understand the definition of the term company. Now let's understand what do you mean by the term company. So the definition is given in your section 2 subsection 20, which says that any entity registered under the Companies Act or any previous Companies Act will be called as a company. So for example, we have today a company is getting registered under the Companies Act 2013 will also be a company, and those registered in the previous act before 2013 in the 1956 Act also will be treated as a company. Now you tell me, is a foreign company, is a Google, Tesla, your various foreign companies, Facebook, are they treated as company for the purpose of Companies Act 2013? See, when we read the core definition, they are saying that any entity which is incorporated under this act. Incorporated means what? It is formed. Is a foreign company incorporated here? No, a foreign company is incorporated outside India but has a place of business in India. So the term company is only including companies which have been or entities incorporated under India only. For foreign companies, we have a different provision that they have to come and inform all those things. But for the definition of the term company under section 2 subsection 20, only those registered under this act will be treated as the term company. Now, there is various classification of companies which we will see. The classification is based on size, on basis of their incorporation, on basis of their liability, on basis of their members, etc. So we will see each classification. The first classification is on the basis of incorporation. So incorporation, so if a company is incorporated in the Companies Act, it is called as a registered company. So if a company is registered under Companies Act or any previous company law of India, it is called as a registered company. Concept clear? So Reliance is a registered company, Tata's is a registered company, any other company which is an Indian company is called as a registered company. Simple. There is another classification which is called as a statutory company. A statutory company. A statutory company, why is it called a statutory? Because they have been incorporated by a statute, by an act of parliament. Okay, they have been constituted or incorporated by an act of parliament, by state or central parliament, okay, by the legislature. For example, a classic example of this is your LIC, Life Insurance Corporation. This has been incorporated on basis of an act of parliament, that is the LIC Act 1956. On basis of the LIC Act 1956, which was passed by the parliament, the LIC, Life Insurance of India, has been formulated or formed or incorporated. Now the question is, whenever the government feel, why will the parliament incorporate companies? So whenever there is something called as public welfare is needed, okay, where the object is public interest, is to serve public interest, they can make these types of companies. Another example of this is RBI Act. Now RBI Act 1934 has been passed by an act of parliament. Pursuant to that, the RBI was formed. Okay, so same all these things when you see LIC, Food Corporation of India, State Bank, ONGC, these are all formed by an act of parliament. Okay, so these provisions of Companies Act do not apply to them. They have a special act and they are regulated by that special act. Such companies are formed to carry on some work of special public importance. Very simple, understood. Now let's see another types of classification. The very simple thing is on basis of liability. There are three types of liability. Okay, now which are those three types? So one, sir, we know only two types of liability: limited by shares and limited by guarantee. What is the third type? So again, pay attention. Can today I form a company with unlimited liability? Can I form today a company with unlimited liability? Answer is yes. When you read your section 3, subsection 2, it says companies in India can be formed as limited by limited or unlimited liability. Even we can have unlimited liability, and limited could be by limited by shares or it could be limited by guarantee. So what do you mean by this? Let me explain. Section is also important. First we'll talk about limited. Limited means what? The liability of the shareholder is limited till the unpaid amount of shares, or if it is a guarantee, then the amount guaranteed by him. If the company makes a loss of a huge amount, then the shareholders' personal assets will not be held liable, only till the amount of unpaid amount is only left. So let's say if I bought a share of 1000, my liability is only of 1000. Even if the company makes a loss of 10,000 crores, my liability is limited till the amount of the share. It will not extend till personal assets. Unlimited liability, it is a very rare type, okay, but still option has been given to the members that if you want, you can also make unlimited liability where your personal assets can also be held, can be sold out. So now section 2 subsection 22 states that a company limited by shares means a company having the liability of its members limited till the amount of the unpaid amount of shares. So if it is 10 rupees shares and I have paid 2, my liability is only 8. Simple. No member can be called upon to pay anything more, is what it is there. So can a shareholder who has fully paid up shares, does he have any extra liability? Answer is no. Now when we come to companies limited by guarantee, now section 2 subsection 21 talks by limited by guarantee, what it is. So generally the subscribers of the memorandum, those who are forming the company, they will give a guarantee that listen, at the time of winding up I will pay 10 lakh rupees. So let's say 5 members are there, they are forming a company, they will give a guarantee that at the time of winding up I will pay 10 lakh rupees if it is required. So my liability is limited till the amount guaranteed at the time of winding up. Now because of this guarantee, it is possible that they will get loans, the company will get a loan, because they know that someone has guaranteed an amount, so bank can also give loan for any business purpose. Generally section 8 company comes in for these kinds of companies where we say, acha theek hai, you start the giving the welfare to the people. Section 8 company is a non-NGO kind of organization. They generally form limited by guarantee, where I will say you start your NGO, if you have any difficulty, don't worry, I am guaranteeing 5 lakh rupees. Okay, so means the liability of the members is limited till the amount which they have agreed to contribute in the event of winding up of the company. The members of a guarantee company are in effect placed in the position of a guarantors of the company's debt to the agreed amount. So whenever we are like guarantors, tomorrow when the liability or the debt will come, we will pay. Now comes section 2 subsection 92 called as unlimited company. It's a rare type, but members want, they can form. If they want a loan, they will tell the bank that listen, we are creating a company of unlimited liability, so don't worry, you give your loan. If the company's assets are insufficient, the directors are ready to, the subscribers are ready, members are ready to pay their personal assets also, they are ready to put on the ground, and they will then achieve a loan, etc. So now this is still rare, but a option is given that if you want, you can make a unlimited company also, which does not have any liability on the limit of the members. So this is given in your section 2 subsection 92, this is given in section 2 subsection 21, and this is given in section 2 subsection 22. Okay, so now we are done with the on basis of the liability also. Now coming on the basis of listing. On the basis of listing, we can have a listed company listed on any stock exchange of India, or if you're not listed, you're an unlisted company. Now remember, whenever you're listed on the stock exchange, there is a separate regulation that is additionally to be followed. What is the name of that regulation? For example, we know that Reliance is listed, Tata's is listed, Mahindra's is listed, okay, TCS is listed, then so many L&T is listed companies. So all these listed companies have to additionally follow SEBI regulations called as SEBI LODR regulations 2015. Now on the basis of members, we will see, so the classification, all this we will be doing 1%, private, public. On the basis of nationality, your Indian company or a foreign company. On the basis of control, your holding, subsidiary, associate, JV companies. So all this we will do in some time, but the classification I'm just discussing now. On the basis of object also, so whether it is a profit making investment company, or it is a producer company, or a Nidhi company. Now again, all these topics we will be doing now, but is very important. On the basis of size, so you can have small companies also, another classification. On the basis of functioning, so if a company is not functioning for some time, then it is called as a dormant company. The section is your section 455. So this will be the topics of the day. Now very first, let's get into the classification as given under Companies Act 2013. Now section 3 subsection 1, section 3 subsection 1 has stated that there will be 3 types of companies in India. So all companies will be booked or bottled down into 3 types of company. One is your OPC, private, public. Sir, what is a OPC company? So OPC company is a company where there is only one person as its member. So this definition is given under your section 2 subsection 62. One person company. Sir, what is one person company? I am the only member in the company. So one person as the member of the company. Normally we know that in private companies there are minimum 2 members, and in public company there are minimum 7 members. So your section 2 subsection 68 tells what is a private company, and section 2 subsection 71, okay, tells what is a public company. Okay, we will see, and for each one. So I told you this classification of types of company is given in your section 2 subsection 3 subsection 1, that you will have OPC, private and public. So companies may be formed as OPC, private, public. OPC will have 1 member, private will have minimum 2 members, and a public company will have minimum 7 persons as its members. To form a public company, you require how many people? 7. Now just to test your knowledge, I will be teaching you, but I want to test your knowledge beforehand. A private company can have minimum, we know, minimum 2, in for public it is minimum 7, maximum how many? So maximum they can have 200. Here minimum is also 1 and maximum is also 1 only. And here maximum is unlimited. So public companies can have unlimited number of members. There is no restriction on the members. Now, subsection 2. Section 3, subsection 2 states that any of these three companies can be formed as a limited by shares, limited by guarantee, or a unlimited company. So now you answer that, can a OPC be formed as a unlimited company? Can I form a OPC with unlimited liability? Answer is yes. Section 3 subsection 2 is saying that any of the classes of companies can be formed as a limited or unlimited company. Okay, so now we will see the very first one is your one person company. Now let me tell you the concept. It's very simple. Just like we had sole proprietors, sole proprietor used to be the own one man show. Okay, so it's always a one man show. We've heard of this line, one man show. He was the brain, he made the business, he developed the business, now he's running. Now having a sole proprietor has a very big disadvantage of unlimited liability. So in Companies Act 2013, they brought in a concept called as 1% company, which is actually a sole proprietor but with limited liability and company like features. Okay, so when I say, so there will be only one member who is there in the company. He can hire multiple employees, he can hire multiple directors. Member means all the profit is his, all the losses is his, and his liability is also limited. Now the definition is given, and this concept of one person company was brought in by J.J. Rani. Okay, by an expert committee, J.J. Rani in 2005. He said that internationally also we have a concept called as OPC, or one man company. We should also introduce it. Pursuant to that, we introduced a concept called as in your section 2 subsection 62, we called it as OPC. Clear? Now this concept is also there in UK and several European countries. Now someone will ask, sir, what is the difference between a sole proprietor and OPC? Very simple, pay attention. Sole proprietor has limited liability. Okay, now limited liability means unlimited liability. Sole proprietor is unlimited liability, so it can extend till personal assets, whereas OPC's liability is limited. Second, a separate legal existence. All the contracts which a OPC used to enter, it used to be in the name of the company, because it's a separate legal existence, different from its members. Once a company is formed, we know one of the features is separate legal. The members are different and the company is different. So therefore, all the contracts are entered in the name of the company. Sole proprietor, everything has to be in his name. Employees are appointed in his name. Property is bought in his own name, etc., and doesn't even have a separate legal existence. So for sole proprietor, company, the business, and the sole proprietor is the same. Also, we go to see that concept of perpetual liability is not there in sole proprietor, because if he dies, the business shuts or it goes to his legal heirs. In OPC, they have introduced a concept that, listen, if a sole member is there, okay, the member is there, he will have to give the name beforehand at the time of formation of his nominee, who at the time of the death of the member, he will become, so it will continue as a perpetual, your succession will be there. Okay, perpetual succession will be there. Now let's see the definition. As I told you, section 2 subsection 62. Now my question to you is, can a OPC be formed as a public company? Obviously not. In public company you require minimum 7 members. Can a OPC be formed as a private company? Answer is no. Private company requires 2 members. So here what they have said, listen, a OPC has only 1 member, but all the other requirements has to be followed as a private company. So OPC may be formed a and it will be called as a private company with one member. So all the features and all the requirements of a private company will be applied on OPC, subject to certain exemptions and reservations as given in the Act. But OPC will be treated as a private company. Public, so it is not possible only. Private company with one member, that is called as OPC. Okay, just for the understanding sake. Now types of OPC, as we saw, 3-2 said that you can form a limited or unlimited company. Okay, then one interesting thing is the word OPC will be mentioned, as we know that if it is a private company, the word private company will be written. If it is a public company, the word limited only will be written. But if it is a OPC, the term OPC will be mentioned next to the name of the company. For example, this is some of the examples. So this is some of the OPCs. So it will be written OPC Private Limited. So you understood the word private limited will also come and OPC will also come. So this has to be written after the name of the OPC. Now let me ask you a very important question. Now this is to be read with the rules. The rule, most important rule, is rule number 3. Rule 3 of the Company Incorporation Rules 2014 talks about OPC. Now, first question. If the member dies, he is the sole member. If he dies, don't you think that the company shuts down? Because he's the sole member. It cannot just... So here they say, listen, at the time of formation only, the one person who is in whose name the member has to give and nominate a person who is a natural person. Natural means it cannot be a artificial person like a company. So he has to give the name of a person, natural person, individual like you and me, name who at the death will become the member of this company. 1. Now my question to you is, can the member or nominee be a foreigner? Can they be a foreigner? For example, can a foreigner, for example, Bill Gates or Elon Musk start a OPC in India? Yes or no? Answer is no. Only Indian citizen, very very important, only an Indian citizen can form a OPC in India. Now tell me, there is one person who is from India but has gone abroad and he is not residing in India for 182 days. So we call him as an Indian but a non-resident Indian, NRI. We've heard of the word NRI. Can a NRI form a OPC? What do you think? NRI, non-resident. He's not residing in India, but he has an Indian passport. He's an Indian citizen. He must have gone abroad to study, must have gone for a job, but he still holds an Indian valid passport. So can he form? Answer is yes. So only a natural person who is an Indian citizen, whether resident in India or not, shall be eligible to incorporate a OPC and shall be a nominee of a... So even nominee can also be, he can become a nominee or a member. Very simple. And when we say he is not a resident, so resident here they are giving not less than 120 days during the preceding financial year. So normally in income tax we read 180 days, but for this purpose we are seeing 120 days in the last year. So for the purpose of OPC, we are seeing in rule 3 it is given that resident, they are saying, who is not residing in India in the last year for at least 120 days. If 120 days he is there, he is a resident. So it doesn't matter, resident or non-resident, it is fine as long as he is an Indian citizen. Now, one person, only one OPC. Now my question is, if I am set up a OPC, I am an Indian citizen, I have set up an OPC, can I form another OPC? Yes or no? Second, I am a nominee already of a OPC. Can I form another OPC or can I become a nominee of any other company? OPC, basically I'm saying that can a person at any time be member or nominee of two OPCs? So the answer is no. A natural person shall not be a member of more than a OPC at any point of time. Sir, what if I am already there? Then you get a certain 180 days time to make that decision and change. So I will resign from one, I will step down from one, I'll give a letter that I don't want to be of your OPC, I am becoming your. So let's read. Shall not be a nominee of more than one OPC. Very simple. You cannot be a member of more than one, you cannot be a nominee of more than one OPC. Where a person becomes a member in any such company, so I become a member, then automatically penalty is not given. I get 180 days time to meet my eligibility criteria and step down from one of the companies. Now I want to appoint a minor as a member or OPC. Is it allowed? A minor is saying that I want to make a particular company OPC. Is it allowed? Okay. Now very simple. Can he become a member? Can he become a nominee? So again, very simple. How can one minor have a liability in the company? In as per law, you cannot create any liability. So therefore, no minor can become a member or nominee of a OPC or hold shares with beneficial interest. Because see, there is always a liability on the member. So a minor cannot be a member or nominee of a OPC. Very clearly stated. Normally what we say in shares, if it is fully paid, he can become the beneficial interest it can be hold. But for OPC, even that is not allowed. Okay, because here that person should be active, there can be liabilities on him, etc. So minor is ineligible. And very very interesting fact that a one-person company can never be converted into Section 8 company. Such company cannot ever be converted into a Section 8 company. We'll see a provision called as conversions of company. This is given in your section number 18, where it says that one company can form into another type of structure. So private can become public, public can become private, OPC can become private company. That is fine. But OPC can never ever turn or convert itself into a Section 8 company. It's a provision given in Rule 3. And also another restriction given in Rule 3 is that no NBFC activity. They cannot engage in the business of giving loans, taking loans, etc. That is not there. Okay, cannot carry on the business of an NBFC at all, including investment in securities, etc. Now, coming to Rule 4. Now, we all know that Rule 3 talks about OPC who can become, etc. In that we had discussed that they have to nominate someone who at the time of your death will become the member. Now this has to be informed in a particular form numbers, his consent has to be given, his withdrawal of consent we will see will be in a specific form. If the original member dies, then which form he will file to replace him and become a member. So all this they have given you the form number also, that is INC 4. So notice of change in nominee, if you want to change the nominee or you want to withdraw your consent, will be in INC 4. Normally all the details of the nominee is given in the incorporation form only. As we see, your incorporation form is there, INC 32 SPICE plus form, SPICE plus form, or whichever is the incorporation form. That time only you have to tell I'm a OPC and he is the name of this is the name of the nominee and this is his consent. So nomination requirement. Knows a subscriber to the MOA of OPC shall nominate a person who in the event of his death will become the member. Very simple. Nominee information filing. Now this will be done in the incorporation document only. The name of the nominee shall be mentioned in the memorandum. It will be given in the MOA, and such nomination details shall along with the consent shall be filed with the registrar at the time of incorporation of the company. So again, in the MOA it will be written and you file it with the registrar in the incorporation form. Now let's say if this guy is not interested to be this, he can withdraw INC 4. INC 4. What is it? He can withdraw his consent by giving a notice in INC 4 to the member that I don't want to become. Now when I inform the member, then the member has to immediately inform the registrar and replace the nominee. The company shall, within a span of 30 days of receipt of notice of withdrawal of consent, file with the registrar the intimation of name of another person who has been nominated as a sole member along with his written consent. Same concept, replacing the nominee. Now this is in case of death. Let's say the original member died. So the nominee will fill his form that listen, this guy died, I am the nominee and I am appointing him and this is my new nominee. So where a sole member of a company ceases to be a member in event of death, incapacity or any reason, the new member shall nominate within 15 days of becoming the member and who shall in the event of his death become the member of such company. So again, he will become the member, the nominee will become the member and he will have to nominate someone else. And such new member shall nominate within 15 days of becoming a member, a person who in the event of his death will become the member. So the new member will now nominate a person who in the event of his death will be there within 15 days of becoming the member. Now we are seeing privileges given to the one person company. Now if you understand, more or less one person company, your private companies will have certain privileges. Privileges means over and above as compared to public company. Normally public company have a full-fledged application of Companies Act 2013 on them, but private company OPCs have certain exemption. Now what are those exemption we will see? Very first one is CFS. They don't have to file a cash flow statement. We know that these operations will be very minimal. Okay, how much can a one person company become big? So we said you don't need to file any CFS. They don't need to hold any general meeting because in general meeting he is the only member. So anything with respect to annual general meeting is not required. They do not need to sign it through a company in practice. Now the annual return. Now since it doesn't affect public at large, we've given a lot of exemption that annual return normally under section 92. If you read your section 92, you'll come to know that it has to be signed by a company secretary in practice. They are saying, okay, fine, this is small, is not required. You need not hold a annual general meeting. So if no annual general meeting, you won't even prepare a report on AGM. Now there is always, they do something called as performance evaluation of the board of directors. Now the board of directors, whether they performed well, what all targets were given to them, what all target they achieved, that also they don't need to do. Company law is saying if you want to do, we are not imposing a requirement on you. Okay. Then if you see, they do not require independent directors. The total limit of managerial remuneration which is there of 11% of net profits is not applicable on OPC or even for private companies. Means what? Normally they had given an upper limit. Listen, if you want to distribute among all your directors, whole-time directors, managing director, the maximum salaries you can give is 11% of net profits. This rule which is given, it is only in your public company. So private company OPC need not have to follow it. Okay. Then one person company not have more than one director on its board. So very simple that one person company can also have one director. Minimum one director can be there. So then directors meeting will also not apply on him if there is only one director. He can have more than that, but sometimes member and director can be the same person also. Now there is a concept called as contracts by one person company. Section 193. Now pay attention to what I'm saying. When a OPC is formed, the company is different from the members. Yes or no? From the member. So any type of contract with third party, or when the company is entering into any contract with the OPC, with the one member, they will have to be registered. So let's say if I am it's my OPC, Zubair OPC Private Limited. Sometimes the member says that I have paid the company so much amount, pre-incorporation expenses. Member, that sole member who's there, he might tell that the company that listen, I have paid so much money out of my own pockets, I will take a reimbursement. So there is a contract between the member and the company. This is also possible. This has to be registered and has to be filed with the ROC. What? Pay attention. We cannot now say that company and member is same. We know corporate personality that both are separate. So when a member, that sole member, is entering into a contract with the company that listen, I have paid you so much, whenever there is profits, so much money I will remove. So then they have a provision in section 193. That is a contract by OPC, one person company, with the member. So section 193 says that where a OPC enters into a contract with the sole member, the company shall, unless the record is in writing, ensure that the terms of the contract are recorded in the minutes of the next BOD. So it should be mentioned in the minutes that this transaction or this decision has to be put in the this of the BOD. The company shall inform the registrar of every such contract, okay, within a period of 15 days from the date of approval of this. So once it is put, then it will inform the ROC within 15 minutes. Within 15 days. So very simple. If a OPC, that member, is entering into a contract with the company, now just remember they are two different persons in the eyes of law. So when there is having any contract between them, it should be reported, it should be told to the BOD, it has to be approved by the BOD, it has to be mentioned in the minutes, and has to be filed with the registrar as well. Now you see the concept of your private company, private limited companies in India. Now the section is given in your section 2 subsection 68. So a private company means a company which by its articles of association, by its AOA, has put some restriction. What restriction? Restriction on the transfer of shares. One, it limits the number of members to 200, and third, prohibits the invitation to public for any of its securities. So let's see. Now from here I will ask you some questions which will be very difficult if your concept is not clear. First is what is there is a restriction, there is a limitation, and there is a prohibition. So first I will take one. It restricts the transfer of shares. So can a private company, members of a private company, transfer their shares? Yes or no? Obviously, if I'm a shareholder, I can transfer my shares to another shareholder. So there is a restriction, means what? The articles will provide that you have to require consent of the other members, or like how in a firm, partnership firm, one member wants to exit and sell to a new, then he requires consent of the others. Similar here also, if one member is exiting, he has to take consent of the other member. So it is allowed, no doubt, but it is restricted. It is not prohibited. It limits the number of members to 200. Now in this 200 also they are saying that the maximum number of members, now members means what? Shareholders. So number of shareholders can be max 200. Can a private company have 300 debenture holders? What is my question? Can a private company have 300 debenture holders? Answer is yes, because there is no prohibition to have more than to have on any 300. This restriction is only on shareholders. So you can have 300, 400, 500 debenture holders also, no problem. But only thing is you cannot make a invitation to public to get them. Privately you can place to these debenture holders and get. What are debenture holders? They are creditors. They give loan to the company. So it is allowed because Section 2 subsection 68 is only limiting members to 200 and prohibits any invitation to the public of any security. See, why is prohibiting any securities, invitation to public of any security? So can I make a public issue of debentures? Answer is no, because that is all, any security, not only shares, debentures, any preference shares, any kind bonds. So a private company can never make a public issue of any security. Now they are saying with respect to your 200 members, they have said something that if there are joint holders, they will be counted as one. Common sense. If two people have given the money for one share, then it will just be treated as one shareholder only. And for the purpose of 200, this is very important, present and past employees are excluded from the calculation of the term from 200. See, I'll read it out and then I will ask you a question. Okay. Persons who are in employment of the company and who have been formally in employment of the company, okay, and have continued to be the members after it has ceased employment, shall not be included in the limit of 200. What we said is max 200 members. Okay, for this 200 we are excluding who all? Employees. Okay, we are excluding employees. Employees could be either past employees who were employees of the company, we have allotted to them, and now even if they have ceased their employment, but they can continue to be a shareholder, so they are not to be counted. So this, and I'll also tell you why this provision has been added. And second is present employees. This is also there. That means if today an employee is there, I want to allot some shares to him, so it is allowed. A private company can allot, it will not be counted in terms of 200. Can anyone tell me why is this given? Why is this exemption given? Because it is in the favor of employees. We want to encourage 50 members, and out of that 60 members are past employees only. So answer is there is no violation of Companies Act, because for us employees we are going to exclude. Now one very important question I'll take you through, which I will ask you. Okay, now pay attention. Can I then, the company says okay fine, let me do one idea. What I will do is, now pay attention what the companies can do and you tell me whether it is allowed or not. Company can think that listen, I will first add him as a member. I first make him as a member, and later I make him the employee of the company. Later he is employee. Will he be counted in the 200? Yes or no? Will he be counted in 200? Yes or no? What question is this? Pay attention. What happened is, a person was a member, he was not an employee, he was a member of the company. I told him okay fine, you are a member now I'm giving you employment also. So later he became an employee of the company after becoming a member. Can I exclude him from the this 200? What is your answer? Will he be counted in the 200? So the answer is yes, he will be counted in the 200. Why? Because what they have given here in the note, that who were formally in employment, they have to be employment first. Okay, those who are in employment, future is not covered. So past employees or present employees, but he has to be an employee at the moment. Then when I'm allotting the shares, who is an employee or who was an employee, they are excluded. So if I have, he is a member, he will be counted. Even if later he becomes an employee, he will still be counted in the 200 limit. Concept clear? So this is what they have given. Now see, I'll explain in case if you didn't understand. I understand number of present employees and former employees are not there. but the exemption cannot be claimed by first being enrolled as a member and then inducted as an employee. Clear? So this is the important point. Now again, can number of debenture holders exceed 200? Answer is yes. They have clearly said that it is for members. And who are members? Shareholders are members, not debenture holders. They are not members of the company. They are creditors of the company. Now in this also very nice case law has been given. In VB Naranga Raj versus Gopal Krishnan, restriction on transfer of shares. What they have said, that it is not a prohibition on transfer of shares. Private company shares also can be transferred. There is a restriction. Restriction means what? It's not freely transferable. That I don't have to ask anybody. How if you are holding shares of a public company, I immediately swipe sell and it is sold. But I can't do the same for private company. There I have to follow the procedure laid down in the articles for transferring my shares. So it is a restriction, not a ban on transfer of shares. So this is clear. Now, sometimes there is a very important point that I want to take you through. This one, okay? Very, very important. And it is a very conceptual point. That any restriction, any condition, if there is a contract between the member and anyone else that we are putting XYZ restrictions on my transfer, that contract is void, it is invalid, it is not going to be applicable on the company unless that has been added in the articles of the company. So pay attention. What I'm saying, that the private company specifies the restriction, limitations and prohibitions which expressly provide in the articles of the association of the company. Here, sorry, this is the line. An additional restriction is not contained in the articles, which is not contained in the articles, but in the form of a private agreement between two shareholders, is not binding either on the company or the shareholders. So let me explain. What happened is, there is the company and there was shareholder A and shareholder B. They had a mutual contract. They had an agreement or a contract that, listen, you will not sell the shares, etc. This was private agreement that they had, private contract. This was not put up in the articles of the company. Articles of the company did have this mentioning. So then this contract doesn't have any legal validity or legal standing or enforcement right. So this contract which is not entered in the articles is not valid on any of the shareholders nor the company. But if any restriction which has been registered in the articles, that becomes applicable on the shareholders and company. So again, what is the answer? That for any contract or any agreement to be enforceable, it should be included in the articles of association. Clear? So this is the rule. Sometimes investors also, this this is for investment agreements. Investor comes in, he tells that this is my condition, etc., and the other shareholders also agree. But if they are not put it in the articles, it is invalid. So therefore, when an investor is coming in and he's making an investment agreement, he's signing it and they are paying stamp duty, everything they're doing. But if they fail to register in the articles, it has no weight only. Clear? So very important. Consequences of alteration of articles. Now pay attention. If the private company alters its articles to remove the restriction given under section 2 subsection 68, then it will be a deemed public company, and all the restrictions, if it is removed, for example, now I start inviting public or I go beyond 200 for any reason, I will be treated as a public company now. The words private company must be added at the end. So whichever private company you see, so it could be M Private Limited. So I will come to know that it is a private company. Now, Privileges and exemptions to private company, always same. We saw for OPC, it will be same for all this. So generally, whether it's a small company or it is a private company, all of them, they have these exemptions. So what exemptions they will have? First of all, CFS is not required. Let's see where they have given. Okay, cash flow statement, sometimes they say do not required, and a report on AGM is not required to be filed. Overall managerial remuneration, which is applicable to public companies only, is not applicable. Lesser compliance on the directors of private company, we require only 2 directors, whereas for public company we require 3 directors. So we say there is lesser compliances, lesser number also which is there. No need to prepare your performance evaluation of the board, whether how the boards are performing. Similar points, no requirement of independent directors, all this. So when you read the other provisions of Companies Act, you will see a lot of exemptions given in deposits and all the other meetings. You see a certain exemptions. So this has to be read when you read all the other provisions of the Companies Act as well. Now we'll see what is a public company and the rules that a public company has to follow. So a public company is defined under section 2 subsection 71. It says a public company is a company which is not a private company. So the definition is very simple. So this is actual definition, that which is not a private company. Okay. Then we have a concept of a deemed public company. Sir, what is the concept of a deemed public company? And why is this? So I will read the provision and then I will ask whether you've understood or not. A company which is a subsidiary of a public company shall be deemed to be a public company even if it continues to be a private in its articles. What does it mean? Let's take an example. So there is a public company. A public company is the holding company, parent company. It is controlling a private company, okay, which is the subsidiary. It is below this. So this is the public company is the parent company, and this is the group company under it which is there. So this must be holding the shares. So they have majority shares. So the public company has some majority shares in the private company. So what they are saying that, listen, this will be a deemed public company. What they have written, that a private company which is a subsidiary of public company is deemed public company. It is a deemed public company. I know now you've understood, but answer is why. What is the logic or the rationale behind this? Can you tell me? See, very simple. A private company has lot of exemptions. They don't have to disclose to the public what is happening within. Now what is happening is the public have given their funds here. With this funding, the public company has bought the shares. Now the public would want to know now what is happening in this company, because it has been indirectly funded. So this public has indirectly funded this private company. All their funds are here. So we will say, listen, the public has full right to know what is happening in this private company. So therefore we'll make it deemed public, and all the provisions of public company will also apply on this private company. Even if the private company is mentioning in the articles that we are private, doesn't matter. You will have to amend your articles and provisions will also apply. All the disclosure requirement will be there. Very simple. Let's move ahead. How many members are required? So at least 7 members are required to constitute a public company. Transfer. So there is no restriction on transfer of shares. Freely transferable. You don't have to ask anybody, and nobody has a right to restrict your shares as well. Difference between private and public. So you will see what all is there in the number of members, on the number of directors. You will show the difference. Then you will say about the articles restrictions that is there. You will talk about the sections which are there, the transferability of shares, etc. Then prospectus is something issued to the public. So only a public company can issue a prospectus. Meeting provisions also, they give a certain distinction that quorum, how much minimum is there. So private companies need to have minimum 2 members in private to initiate a meeting for the quorum, but for public company it is given different. So we will see in the meetings provision also what it is there. Generally it depends on the number of shareholders, they'll keep it 5 quorum, 5, 15, 30. So if it is up till 1000, now this is for public companies. Private is very simple, 2. What is the quorum for private? 2. For public it depends on the number of members. So if it is up to 1000, then it will be 5 members will be the quorum. If it is from 1000 to 5000, then it will be 15. And if it is still 30, then it will be more than. So if the members are more than 5000, then the quorum is 30. Now this you have to see the quorum provisions in the meeting section. Okay. Then we are done with section public company section. Can you tell me which section number it is? What is the section for public company, for private and for OPC? Can you tell me quickly? So again, this you should quote because in the exam it has to come. So companies could be either a OPC, private or public. So this is section 2 subsection 71. This is section 2 subsection 68 and this is section 2 subsection 62. Clear? So this is the very simple provision. Now section 2 subsection 72, what is it? What is section 2 subsection 72? It talks something about a public financial institution. Public financial institution. So what is a PFI? Very simple. Okay, now pay attention to what is a PFI. So a public financial institution means, so they have given you the names LIC, IDFC, UTI, and which is any other institution in consultation with the central government does with the RBI, the central government can notify. So they have given you few names clearly given. So LIC, UTI, IDFC. So these three have been mentioned in section 2 subsection 72 as public financial institution. Rest with the central government or the Companies Act or in consultation with the RBI they will announce. But three names are clearly given, rest all will be announced or they will be announced by central government. So UTI is a PFI, LIC is a PFI and IDFC is a PFI. So what if it is a PFI, public financial institutions? So with that, when you read the other provisions of law and various other RBI acts, etc., they say if it is a PFI, XYZ benefits will be given and so on. So now we will go to the next section, the next topic. We'll be starting the section of your small company. Now the section for the small company is section 2 subsection 85. It defines a small company. Now what do you mean by the term small company and why was it even there? So a small company, earlier what JJ Irani said, Dr. JJ Irani, he said that listen, why have the Companies Act full-fledged sections be applicable on small, which we want to be applicable on large companies? We don't want it to be applicable to small companies because cost of compliance will only go high. They are not making that much amount of profit. They are not, touching upon public interest that much. So we cannot put so much cost of compliance on them that they become not able to function. So as an ease of doing business also, they have said that we'll first bifurcate that this is small company and then we will say these exemptions are available to small companies. What does JJ Rani say? That there is no reason why small companies should suffer the consequences of regulation that are actually designed for large companies. Okay, so then accordingly we had a concept of small company. Now, what is a small company? They have defined under section 2 subsection 85. They said a small company, they are defined on the basis of two things. What are those? Paid up capital and turnover. If it will be small, as in they are not exceeding, paid up capital is max 4 and turnover is max 40 crores. So if this is there, it is a small company, and if it is a small company, then we will see certain benefits given here there to them. Clear? However, they have given a proviso also, which is very important, which they ask in the exam. So firstly, what is a small company? A small company means a company other than a public company. See, other than a public company means it will be a private company. So a small company will be a private company having paid up capital of max 4 crores or turnover of max 40 crores. Clear? The limits is given. If it is a public company having a paid up capital of 3 crores, it is not a small company. So a small company has to be a public company. If it is it has to be a private company. If it is a public company, definition is only saying that a small company means a company other than a public company, because a public company is not a small company clearly given. So for public company, you don't even have to look at the threshold. It's directly a large company. All the rules, regulations apply. So only private companies which have these within these thresholds is a small company. Another thing they have given, provided that nothing in this clause shall apply to any, that means all these companies are not small companies. They are not small companies. Who? These all. A holding subsidiary, a section 8 company, and a body corporate governed by a special act. So they are saying nothing shall apply to these particular things. So whatever is given in a small company provision, nothing shall apply, means in simple words, any of these three companies. So if it's a holding company or a subsidiary company, or it is a section 8, that is an NGO company, or which is formed under a special act like RBI, LIC, etc. These are all not small companies. They are all full-fledged provisions of Companies Act will apply. So if I read this and try to understand that a small company is a private company which is within the threshold, and they should not be a holding subsidiary of anyone, they should not be a section 8 company, and they should not be a company or body corporate governed by any act. Clear till here? Very important small company provision. Now what benefits they get? Similarly, what we had read for private company, for those OPC, CFS is not required, cash flow statement is not required, annual return need not be signed by a PCS, practice company secretary. Then they don't need to hold AGM report, they don't need to file. For small company also, they have said that your board meeting is also held, does not have to be held 4 times in a year. It is held half yearly. So when you read this other provisions also, you will see a lot of exemptions given that is there. So they don't need to do a performance evaluation of the board. So the common exemptions are given. Reduced board of directors requirement, like exemption from, as we have public companies require minimum 3 directors, here we require max 2. They do not require independent directors, and the managerial remuneration provision is not applicable on small companies because it is only applicable to public company. Now we'll do your section 8 companies, which is your not-for-profit organization or NGOs. Now NGOs are set up for a certain purpose, for benefiting the society or benefiting the public or benefiting any animals, or for promoting any social cause, arts, commerce, science. For this you set up a company, you get a license from central government. If central government is giving you a license, okay fine, these are your objects, take this license. This gives me a lot of benefits. This I will then normally, if you set up a section 8 company, the next step is also to file a income tax NOC for getting these privileges of Income Tax Act. So I also have to inform the income tax department and get their NOCs. After that, anyone who is depositing in the NGO will get tax benefits. So all this has to be done. So let's read what is given in section 8. So section 8, association not for profit. My question before I start, can an NGO make profit? Yes or no? Can an NGO make profit? Their object is not profit making, but they can definitely make profit. The profits what they make cannot be distributed among the members as dividend. That listen, you all have given money, we made profit, take this. They cannot distribute as dividend. These profits have to be reapplied to promote the original objects of social cause. So for example, Being Human is there, Salman Khan brand. They are selling expensive shirts. They are making that money. They might be selling below above the cost price, obviously. One shirt is for 3,000, 5,000 rupees of Being Human. They are making profit. The profit is then reapplied for the objects. So now let's read the provision. Very, very important. Where it is proved to the satisfaction of the central government that an association of persons registered as a limited liability. Now, first thing is a Section 8 company will be registered as a limited liability only. Has its objects of promotion. They want to promote what? Arts, commerce, science, any social welfare, religion, any charity, protection of environment, any other objects. One. So they have these welfare objects. They intend to apply the profits in promoting these objects. So you can apply the profits, you can make profits, but these should be applied in promoting the objects. Third, an intent to prohibit the payment of dividend to its members. So dividend is a distribution of profit that cannot be distributed to the members. The profits has to be reapplied for promoting the objects. Then the central government may give a license to allow such persons to be registered as a limited company. Okay, and the word limited or private limited need not be written also. So first question, can a Section 8 company be registered as an unlimited company? Answer is no. Section 8 is only saying it has to be limited. Second, do they have to write the words limited? So have you heard Being Human limited or private limited? No. So they have been exempted from adding the word limited or private limited. When you heard of another NGO, can you name a few NGOs which you have? Maybe PETA. So you don't need PETA, private limited or limited. Even if you see CRY is also a very national level NGO. Okay, so these are NGOs, they will never have any, they'll just the name of the NGO, that's it. Now, another benefit is when they are registered and someone is transferring the shares, issuing the shares, stamp duty is exempted. So the company is registered without paying stamp duty on its MOA and articles. Very, very important. Normally, when a company is incorporated, stamp duty is payable on the share capital, etc. So this is exempted. So without paying stamp duty, I can register. Now imagine you're getting a central government license. So the benefit will be given. This is very, very special case where a firm can be a member. What? Normally, a firm cannot be a member of any company because they don't have separate legal existence. The partner can come in individual capacity. But here we are saying, let's say it's an NGO, there is no big liability, etc. They are just giving charity. A firm may be a member of the company under this section. And restriction on the alteration and this, so obviously they cannot alter the MOA, AOA without the consent of central. Central government has given you grants. Sometimes they give grants also. So you cannot amend now the articles or the MOA without the consent of central government. Central government is funding. Central government can also ask that NGO A and NGO B, I like them very much. They can merge it. If I find that NGO 1 is violated, is not running as per the objects properly, I will ask them, I'll revoke their license and say all your funds which are charitable purpose should be merged here. So amalgamation of NGOs can be done by central government however they want. Transfer of dissolution. So if in one NGO we are dissolving, cancelling the license after payment of any other liability, salaries, rents, everything, whatever extra funds are there, we can even, let's take an NGO which is there, which is now no longer able to function because the people are not there, etc. So what we will do, lot of funds are there. So that funds we will either transfer it to another NGO which has similar objects, or we will transfer it into insolvency bankruptcy fund, which will again be used for the welfare of people. See, upon dissolution and paying off all the debt whichever is there, without going to the insolvency fund, they can run it as per the IBC code also. Restriction on amalgamation. So again, you cannot amalgamate with any other company you want. So Section 8 company can be amalgamated with a Section 8 company only. So Section 8 can merge with a Section 8 company only. A company registered under this section can only amalgamate with having similar objects. Conversion into any other company, you can convert into whichever you want. Now this is a very interesting question, and many of the time people don't get it right. Can a Section 8 company be converted into a profit making entity? Yes or no? Think. Section 8 company is being converted into a profit making company. So the answer is yes. You cannot force someone to do charity for the lifetime, but central government approval is needed. See, a company registered under Section 8 may convert itself into any other company after complying with certain conditions, but only OPC cannot be converted into Section 8. Revocation of license. Now central government gives the license, central government also has a right to cancel the license. Once they cancel the license, all exemptions which you get, it will be exhausted, and before cancelling the license, opportunity of being heard will be given to the company. Now we are seeing the next topic, that is your government company. Now what is a government company? From the name itself, whichever company the government is holding majority shares is called as a government company. Now government means what? Central government, state government, or both? So answer is both. Collectively also we are taking. So if the governments are also collectively holding, we'll call it as a government company. Section 2 subsection 45 talks about a government company. Means any company in which not less than 51% of the paid up capital is held by. So not less than 51%. So at least 51% majority shares is held by whom? Central government, state government, or both, or partly by center and partly by states. Okay, and includes a company which is a subsidiary of the government company. So anything which is a subsidiary of the government company is also a government company. First, let's take an example. If a company like ONGC, okay, we have the central government holding 52% shares, it will be treated as a government company. If state government was holding 52%, then also it will be a government company. If your state government was holding 32% and central government was holding 20%, so then also combined also, if it is holding more than 51%, or at least 51%, it will be treated as a government company. Very simple. So if it is a government company, so what? What are the benefits? A lot of benefits. You read the Companies Act 2013 so many times. After the full provision is written, below they will be written a note that these provisions are not applicable to government companies. Okay. Now distinction. Now this is a very, very important point, that today a government company is there. Let's say BSNL or any other company. I'm just giving an example. BSNL is there. I'm taking an example that it's a government is holding 80% shares of BSNL. BSNL will be treated as a government company. Yes or no? Yes. Now the question is, BSNL started going into tremendous loss. It started going into losses, and later it was found that they could not pay the employees' dues. So they became defaulters of loan, of, let's say, all many bad things happen, employee salaries, etc. Can they file a case on government? Can these defaulters, the creditors, the employees, file case on government and tell that, listen, from the consolidated fund of India, from the government revenue, from our taxes, pay my salaries? Can they do that? Yes or no? So they say, listen, this, and another thing, employees are asking for pension. Employees are also asking for pension, that, listen, we are working under the government company, so we should get pension just like how government employees get. So there is a multiple case laws where they are saying that employees of government companies are not considered as employees of government. Therefore, no pension. No pension. Even if it is a default, the company will pay how much ever it can. So we are just holding in the nature of a shareholder, and the shareholder's liability is limited till the amount of the share. So whatever dues are there, it is only how much ever BSNL has. They are only shareholders, right? So shareholders' liability is limited till the amount of unpaid shares what has been decided. So there is a distinction between government company and government department. Answer is yes. The government company is neither a government department nor a government establishment. Employees have no right to claim against the government for their salary. Okay, it does not do so as state, but as in the essence of a company. So the government is holding shares as a shareholder and not as running as in the form of a government. So these are the case laws which I have explained. Now, once in Andhra Pradesh Road versus Transport Corporation versus ITO, what it was held, that, listen, you are a government company and government company is making profit. There is a provision in Article 289. There is a provision in Article 289 that the government's income, that the income of the state are exempted from taxation. What it was given, that income from of state is exempt from taxation. So they said, listen, the government company is a separate legal existence. It is not treated as state income, and therefore tax will be levied as it was to other companies as well. Okay. The court observed that the companies were incorporated under the Companies Act and have a corporate personality of their own, different from that of the government. Okay, the land, buildings, everything is owned by the company, not by the government. And therefore, no exemption was given of tax, since they are not treated as government departments. Similarly, what I have explained, they have stated here that employees of the government are not employees of the state government. Okay. Therefore, if it becomes insolvent, it does not mean that the government has to pay the money. Okay, and if a company goes bankrupt, government company goes bankrupt, doesn't mean that the state has got bankrupt. Now they have said that, listen, whichever other, now there is a department specifically made by the Parliament of India, that, listen, whichever state government is there, wherever the state government has invested, wherever the central government has invested, we should have a record of that or no? Where the government has invested in which all companies and made it a government company, we need a report of that to be placed in the Parliament. So this is what is given in section 349. Transparency in government companies. So we require some transparency in government companies. So what they've said that report preparation, that within 3 months of the AGM, so a government company holding a meeting, annual general meeting, within 3 months they have to prepare a particular report, annual report, with the observations of the CAG. So now Computer and Auditor General of India, he will give his observation. He appoints the auditors in government companies. This will be placed before both the houses of the parliament. Okay, if it is a state government, it will also be placed before the state government. So again, very simple. What am I saying? That with respect to government companies, a report will be prepared. It will include the observation of the CAG, and it will be placed before the central government or the state government or both, depending of who all are holding shares in that company. Okay, so we see all these companies are actually government companies. SAIL, Steel Authority of India, Indian Oil, HP, Bharat Gas, Bharat Petroleum, these are all government companies. Now what all reliefs are there? There are multiple reliefs, but we will see some important ones I will highlight. Okay, first is name must include the word limited in their names regardless of private or public, and it may use the word state. So State Bank of India, they may use the word state if they want, if it is a government company. Second, if it is a government company, they will not use the word private, they have to use the word limited. Transfer of shares are exempted. So now a certain exemption have been given from transfer of shares. So when the government shares are being sold, so let's say government is holding shares in the government company, tomorrow government requires funds, so they can even sell their shares. So when they are selling the shares, a certain tax benefits have been given. So government would normally sell whenever there is losses or government is in need of money, then only they will sell their shares. Dividend declaration. Companies fully held by the government are exempt from certain requirements. Relaxed board disclosures, no cap on the number of directors. So again, when you read the provisions for the maximum number of directorships or director one can hold, maximum number of directors that can be appointed, government companies can appoint more than 15 directors without special resolution. So normally 15 directors can maximum be appointed, whether it be OPC, private, public. Beyond 15 directors, if you want to appoint, you have to take a special resolution. For government companies, they can appoint without taking a special resolution. Okay. Second, another important point, if you go to see that government companies can hold their AGMs even outside their registered office. Normally AGM section, if you see section 96, what do they say? That government company has to hold a AGM within the area in which the registered office lies. For government companies, they can even hold it outside, somewhere else, not necessarily in the city where the registered office lies. They can keep it anywhere. Okay. Then they have given a lot more exemptions, which is there. When you read, you will come to know. Now we'll start with a very important topic which always is asked in the exam, that is your foreign companies. Now what is a foreign companies and how do they operate in India? So let's take a practical scenario that there is a foreign company which has been incorporated abroad. It wants to start its practice in India. A foreign company wants to do business in India. So how will they start the business? As a consultant, can you tell me? So either they will set up a subsidiary here, they will have to incorporate a company, for example Pepsi India, Pepsi USA and Pepsi India, Google USA and Google India. So they will register a company in India which will be their subsidiary. Or what they can do is they can either, as I told you, they can have a wholly owned subsidiary, or what they can do is they can have a JV, a joint venture. So when you see a foreign company, Air Asia, they had a partnership with Tatas and they came into India. So that is also fine. Starbucks, they want to come in JV. Sometimes in foreign countries you don't know how you will be treated, so better to have a face of that country. That is why when Starbucks came in India, they collaborated joint venture with Tata's, because Tata's has a very good goodwill. So accordingly, it happened that Tata Starbucks. So they established, so they can come as a JV, or third option, they can set up their branch office in India directly as a foreign unit only. It will be there. For example, we have HSBC Bank is there, Hong Kong, Shanghai, Bank of India. They can have their branches out here. So either they will come in India as a wholly joint venture or as a office. These are the only three options that they can come into India. Now when they come, they will be coming as an Indian company or as a foreign company. Now can you tell me that they can decide to come as an Indian company? To come as an Indian company, they have to register under Companies Act. Or if they are planning to set up their branch office only, then they can come as a foreign company. So when you read the detailed provisions of all this, you'll come to know that as an Indian company, if they want, they will set up a wholly owned company, or they will have a joint venture. The joint venture, when they come, they will register it in India. So Mercedes Benz, Jaguar and Tata's. So they will register a company, either PepsiCo India, Tesla India, or they will come in as a joint venture and then they will form a company. Like maybe Tata Starbucks can have, your Air Asia can come. They all registered in India and have a Indian company. Or they would say that, listen, we don't need any tie-ups with Indians or registration as India. We will just set up a branch here. So for this, all this we have provision, and all this is covered in other parts of the lectures. Now let's see the provisions and the section numbers which are there. Very, very important. Okay, so this is extremely important. So a foreign company's definition is given under section 2 subsection 42. Read with chapter number 22, section 379 to section 393. Read with rules, that is registration of foreign company rules 2014. Is this clear? So what is it? It is your section 2 subsection 42, which defines what is a foreign company incorporated outside India but having a place of business in India, whether online or offline, or whether physical or in virtual. Chapters have been given, which ROC they will speak to, where, within how much time they have to register, within how much time they have to file the annual reports, all of those, and a company's rules. All this we will see now. Now, first we will see the definition, and very, very important, I'll ask you a few questions also. So, section 2 subsection 42 means any company or body corporate incorporated outside India. So they are formed outside India. Now when we say he's a foreigner, means what? He must be born outside India but come into India. Similarly, he is incorporated, formed outside India but having a place of business in India. Now what if it is completely online? Amazon, Netflix, they don't require only a physical presence, but still they will be considered as a foreign company. Why? Because you have a place of business in India. You are selling products in India. Amazon, they don't really need any, everything is virtual. Amazon Web Services, all of this, they all are there. Certain Facebook, everything is digital, but still they will be treated as foreign companies since they have a place of business in India. They are selling products in India and conducts any business activity in any other manner. So if you conduct business activity in any other manner, it's a very wide definition, you will be treated as a foreign company. Now from this, there are few questions that I will ask you. There is a foreign company, pay attention, which just simply opened a bank account in India. They didn't do any business. Can we say that it is a business has been started, business has been done, and they have to be registered? So what they have said, listen, carrying on business, can you see this line? The place of business in India. So now, carrying on business, what they have given, this line has been expanded to explain. See, conducts any business activity. So it will be said that if you're just doing these minor little things, it will not be called as you're doing business in India. For example, a very small transaction was done, one off case. You're not, it will be constituting not carrying on business. So it will be deemed all these things are not carrying on business, and therefore if it is not carrying on business, you don't have to be registered. So you just conducted a shareholders meeting, directors meeting, you just simply opened a bank account, you did transfer of shares, you appointed certain contractors, you got some orders, created certain debt charge on your property, or you collected debts or trying to claim certain property of any kind. So all this is not deemed to be carrying on any business. So this has to be in clubbed with some other genuine proper business activity. Then we will say that you have a place of business in India. And if you have a place of business in India, then the rules apply. So if a foreign company just come here and they have a share transfer office here, but they're not doing anything else, nothing else, then it is not required to be registered. A foreign company just simply opened their bank account. At this point, they don't require a registration till other activities are actually done. Now let's get into the provisions. The provisions are given in your chapter 22 of the Companies Act 2013. The provisions are given from section 379 to section 393. Clear? Now we will see what is section 397. Each one we will see all the important sections we will do. So what is a section 379 talking about? It talks about a deemed Indian company. Sir, what is a deemed Indian company? Make a guess. So deemed Indian. So when a foreign company is, the shares of a foreign company are held majority by Indians, it is a deemed Indian company. Deemed Indian company means it is actually a foreign company, but the control is with Indians. So section 379 states that where not less than 50, at least 50% of the paid up capital of a foreign company is held by Indians, such Indian company will be called as an Indian company, and all the provisions of them will be applied in India. For example, Indians are there, they have gone in Dubai and they've set up a company in Dubai. All the control, funding, everything is by Indians. So we'll say, listen, don't fool us, you're just going in a tax haven. It is a deemed Indian company, and all the provisions as what was applicable to Indian company will also be applicable to you. When at least 50% of the paid up capital is held by Indians, it is a deemed Indian company. Now coming to if I have set up my place of business in India, then I have to inform the ROC, right, that I have come in India. Within how many days? Within 30 days, I will inform the ROC. Simple line. Within 30 days of setting up your place of business in India, you will inform the registrar. Now what all I will give the registrar when I'm filing, making the filings with them. And this is generally, you will read that whenever they use the word registrar, mean registrar of Delhi, New Delhi. Later part of the provision, you will see that whenever they are using the word registrar, they are actually meaning registrar of New Delhi. So all the communications, everything, filing, all is done with registrar of New Delhi. Okay. So section 380 is talking that you have to inform within 30 days to ROC of New Delhi. What all will you inform the ROC? I'll inform the ROC, hello, I am from this country. This is my certificate of incorporation. I am from Spain. So I'll say it's written in Spanish, get it in English. So again, a certified copy of the MOA, AOA, you have to get a translated in English if it is in another language. Full address from where you are, list of directors, declaration of none of the directors have been convicted or debarred, okay, from in India or abroad. That you are all clean, all the directors have not been debarred anywhere. Then you can come. Now our annual compliance. This I give you a one-time compliance. Within 30 days you have to inform. Now I'm talking of annual compliance. Now again, this thing was there which I told you. Filing is done, etc. In which form number? Can you tell me? In which form number will I inform the ROC that listen, I have set up my place of business. Within 30 days I'm informing you. These are the list of all my company and the people around who all are there. It will be in form FC1. In form FC1. Now we are seeing an annual compliance. Annually you have to file something. Financial statements, very simple. So it requires a foreign company to maintain books of accounts and file a copy of the balance sheet and the profit and loss account with the ROC every year. This display of the country of incorporation section 382 says that you have to display that which countries, and it has to be there on every single documentation of the company, letterhead of the company, on the nameplate, everywhere. It has to be exhibited on every document and every place that we are a US based company. Country of origin should be given. Then inclusion of share transfer registration office in the place of business. Now my question is, okay, that if someone just has a share transfer office in India or a registration office, will it be constituted a place of business? We had discussed that details above, right? So defines place of business to mean share transfer office. This means that these offices are considered as a part of operational business and subject to regulatory oversight. All of this, okay? Place of business to include share transfer and registration office. So again, this, if you have a share transfer office or a place of business, it is considered to be place of business. Let's read the provision, then we'll finalize it. In this case, it was held that where the representatives of a company, this is completely different, that representative of a company were there, they were living in a hotel. From that hotel, they were making all the decisions about business. So it was deemed that yes, they have a place of business in India. So representatives of a company incorporated outside India, they stayed in a hotel in England for looking after matters of the business. It was held that the company had a place of business in England. This is a case of England, but they are saying that if you are living in a hotel and making all key decisions of business, it is said that yes, you have a place of business. So again, with respect to registered office, just let me come. Okay, so transferring, now just please note this down, it's simply transferring the shares is not considered to be a place of business or carrying on any business. Okay, this is given. But what does this provision say? That if you are having a office, registration office or share transfer office, then that will be deemed to be a place of business. Please note it down. So simply transfer of shares is not covered, but if you have a office, registration office, share transfer office, then it is called as a place of business. And if it is a place of business, you have to inform the ROC and do all the compliance. Winding up also, let's say if you have wound up also, you have to inform the ROC. But now that you're not a Indian company get registered and wound up under the Companies Act. For here we have made a separate chapter in the Companies Act, which is called as winding up of unregistered companies. Unregistered means they are not incorporated under Companies Act. They are just registered, right? So we are calling them that there is a separate chapter that a foreign company, like let's say Vodafone, wants to wrap up its operations in India. They're making huge losses. They want to shut down. So when they shut down in Companies Act section 376, they are saying that when a foreign company has decided to cease its operations, it may be wound up as an unregistered company in India because they were not incorporated in India. So there is separate rules for it that will be followed. Now coming to the form numbers in the rules. Okay, when we see the rules, what are the name of the rules? Company Registration of Foreign Company Rules 2014. It says Form FC1, registration of place of business by foreign company. So foreign company must file FC1 to the ROC within 30 days of establishing a place of business in India. Very simple, as we had discussed. Additionally, the application must include a copy of the regulators, okay, if it is there. So if it is a banking company, then they will require sectorial regulators also. Must include an attested copy of the approvals from the regulators if it is needed. Now FC2, FC1 was incorporation of those initial details within 30 days. If any amendment is done, then it is done in FC2. Very simple. If any alteration is made in the incorporation documents, which was there in the registration documents, then the foreign company is required to file a return in form FC2. This return will include particulars of the alteration and will be filed within 30 days from the date of alteration, from the date on which the alteration was made. So if a foreign company has shifted the registered office, or their key people have changed, or they want to alter anything, then they will file FC2 within 30 days of the alteration. Simple. Now this is what I was telling you, that whenever they use the word ROC, they mean ROC of New Delhi. Documents required to be submitted by the foreign company to the ROC must be delivered to the registrar of New Delhi. All references to registrar under this chapter are to be interpreted accordingly. Means registrar of New Delhi. Now when you cease to conduct business, cessation of business notice. If a foreign company is no longer has a place of business in India, it must promptly notify the registrar. Upon the notification, the company's obligation to deliver the documents to the registrar ceases, provided it does not have any other place of business. Means what? That if a company has wound up, they will inform, and after they have done, then their liability is done, provided they do not have any other operations in India. Now we'll see the concept of producer company. Now producer company are all related with primary produce, that is agricultural goods. So whenever agriculturist or maybe any farmers or any anyone engaged in the business of milk, all those poultry business where they deal with the goods directly, they all can form a company called as producer company for their mutual benefit. Now a producer company is given in chapter number from your section 378A to 378ZU of your Companies Act 2013. It deals with producer company. A producer company is a body corporate. It's a body corporate having the objects as specified under section 387B. So what is a producer company? Now pay attention. 378A is saying that a producer company is a company having objects as given under 378B. So now we'll go to section 378B to see the objects of producer company. And all these objects you will see, they will all be written with respect to primary produce, agricultural produce, harvesting, storing. Any company which is engaged in the business of harvesting, storing, warehousing, transporting, financing, any related activity, etc., filtering, cleaning, fertilizers with respect to primary produce, all is considered to be a producer company. So the membership of producer companies open to such people who among themselves are primary producers. So only agriculturists or those engaged in primary produce who are making some kind of growing any vegetables, fruits, they all will come here. Okay, even the seafood will also come. They are having shrimp farming, even they will come in. Now object of the producer company, as I told you, 378B is important. Objects of the producer company can be all or any of the following. So any producer company will have any of the following objects. So all of this: producing, harvesting, marketing of primary produce, processing, preservation of primary produce, supply of any machinery equipment related to primary produce, education, training, consultation, services, power generation, resource management, okay, insurance of primary produce, welfare measures. So this you can read, is very simple. Any ancillary, incidental and consequential activities are also covered from the above. Giving financing is also covered. Okay. Now, examples of some primary produce. So if you go and check, so from the ICSI, from the MCA portal, you will come to know how many producer companies are there. Now, they have to write the word producer company against it. So Kisan Bandhu agro producers can be there. Agro acres women farmers producer company. So they will have the word producer company against its name. Now, okay. So now we'll just take a short little break. Okay, now pay attention. We'll just take a short break. Then I will cover the other parts also and finish it off. Till here, is it clear? Yes or no? I want you all to put in the chat box till here, is it clear? Yes or no? Then I will just go ahead and finish the other. So your this chapter is over. Clear till here? Yes or no? Okay, just waiting for you all. For you all to just put. I'm just taking a 10-minute breather. Then I will cover the all these other investment and Nidhi companies also. Nidhi companies, now pay attention. Great. Now pay attention. Even I am going to cover all the other types. In this, there is a associate company, all this, and one Nidhi company will come. In Nidhi company, you see in your associate, it comes in two chapters. One is Nidhi company will also come in your uh, financial service organization topic. Financial service organization topic also they are giving about Nidhi companies. Please check it. So that also I will cover. So I'll take a break of 15 minutes and then we will return and cover the balance part also. Clear? Okay. So a 15-minute break. Till then you all can just brush through your entire particular other topics that is there. And now I will cover with the other things after this. All this is done. Okay, until now if you have not liked the video, like the video, and just one request, share it in your WhatsApp groups of your friends as well. Okay, there are many students who don't know about it. Producer company I'm done. I'll start with holding subsidiary and associate company. Okay, in some time. So let's take a breather of 15 minutes. So we'll come back at 2:15-20 minutes. So maybe 2:30. 2:30 is a lot, but still 2:30. Okay, so we'll just come back after the lunch break. I'll cover the other parts also. Clear? Okay, great. Or wondering, should I keep it just 2:20? We'll be back. Okay. Hi guys, am I audible to you all? I just need in the chat box. So I will then cover even this and a topic also from your FSO, that is your financial service organization, that which is, and also in your company law also it is there for types of meetings, which is your Nidhi companies also. So again, that is also 5 mark topic which I will also cover. Now before I start, and that too I will be doing right now. So just be with me. Am I audible and visible? I just need a confirmation from you all in the chat box first. So JTG in the chat box so I can quickly start. Okay, thank you Akshay. What about others? Okay. Vidya, right? Okay, great. Okay, so just one thing is, if you all have not yet joined the Dream Batch, the link is in the description. Whether you're old syllabus or new syllabus students, you can enroll. In 99 rupees, I've given you all access to all the lectures, and these lectures also I will later edit it. I mean, today itself I will edit it and I will put it in my the Dream Batch also. Okay, so let's start. Hi. So now we'll be starting the topic called as holding subsidiary companies and associate companies, and along with that we will see other types of companies as well. So first is holding subsidiary companies and associate companies. Now these are all companies, classification of companies on basis of the percentage holding that is there or the control that is exerted in another company. So let's see first the holding and subsidiary. Very simple. Holding company means the parent company, which a parent has control over their children, yes or no. Similarly, section 2 subsection 46 states that a holding company means a company which has children, which has subsidiaries. Okay, so a holding company is a company which has subsidiaries. Now sir, what is a subsidiary? So that definition is given in section 2 subsection 87. Okay, now what is a subsidiary? A subsidiary means a company which in relation to a company, how do they describe? Provide that a subsidiary means a company in which the holding, so in which the parent company controls the board of directors, or they control the they have majority stake in the company, or have control by any other means. So what they have given, that means a subsidiary, a child parent company. So they will say a subsidiary means a company in which the holding has controls over the composition of the board of directors. So if my board of directors are controlled by another, I am the subsidiary of that company. Similarly, I exercise control. There is a control, or there is a control over more than half of the total voting power, either by myself or through other subsidiaries. So very interesting. Let's take one by one. So there is company A, okay, which controls the board of directors, or has a right to appoint the majority of the board of directors, or has appointed the majority of board of directors of company B. So in this case, company B will be the subsidiary and this company will be the holding company. Simple. So this is done. Second point is, there are different kinds of control. Either I control your BOD, or I have control by way of shareholding, which exercises control over more than half. So even 50.01% I will also become a holding. Why? Because it is more than half. Half is 50%. So it doesn't necessarily mean only 51. Even 50.1 is also covered. More than half of the voting power in the company. So if we are controlling, I have 50.1% shares in the company. So again, this becomes the holding and this becomes the subsidiary, either by myself or through others. So that means company A has 30%, whereas another company, so let's take an example, very interesting. This part, together with one of more of its subsidiaries, is also covered. So this is covered if you're directly holding. If you're holding along with your subsidiary is also covered. This is called as a step down subsidiary. Step down subsidiary. So what is it? I am controlling you with the help of my subsidiary, which I will also tell you. So don't worry. Right now just understand direct relationship. Either I'm controlling a BOD or I'm controlling majority shares in the company. I become a holding. How I control through my subsidiary, I'll show you, called as step down subsidiary in some time. Which this phrase is there, which is called as either on its own or even through one or more of its subsidiary. It is I'm controlling you through a subsidiary, which I will tell you. So in short, I'll just tell you, A controls B, holding subsidiary is there. B controls C. So B is A's subsidiary. So I am controlling through a subsidiary of mine. So even A will be the holding of C. So when C is a subsidiary not only of B, but C is also an indirect subsidiary of A. Why? Because A is holding control, is having control with the help of its subsidiary. It is having control over another company. This is what they have said. Is very simple. Direct control means I own. Indirect control means through my entities I am holding control. Okay. So very simple. This is a classic example of step down subsidiary. This is called as a step down subsidiary. Why? Because a subsidiary is also my subsidiary. So imagine if I can control you and you can control C. So I can indirect control C also. So that is called as a step down subsidiary of mine. Simple, indirect control. Clear? Okay, if I have the right to control your BOD or the composition of BOD or to appoint or remove your BOD by any agreement, whatever, so it will be said that I am a holding of that other company. I have control. Okay. The expression company means a body corporate. Okay. And layer means a subsidiary. So another word for layer is a subsidiary. Very important. It will come when we do later part. Right now it doesn't have that much impact, but when we do investment companies or when we do section 186, that time you will come to know they don't use the word subsidiary, they use the word layer. Layer and subsidiary is same. So layer in relation to a holding company means a subsidiary. So layer means a subsidiary. So I can say that I have two layers of companies, means I have two subsidiaries. Finish. Okay, now let's see. There are multiple types of holding companies as well. Let's understand holding company and their types. So one is called as a pure holding company. A pure holding company is one which holds majority stake but is not involved in the day-to-day operations of the company. Its main purpose is investment and to buy at low, sell at high, or to sell it in future. My intention is not to run the company. So a pure holding company exists where you solely want to hold the shares and do not want to engage in any other activity. For example, Berkshire Hathaway is cited as a pure holding company of Coca-Cola. So Coca-Cola holds Berkshire Hathaway, that is Warren Buffett's company. It is holding majority shares in Coca-Cola, but it does not run into the operations, where it will do business, how it will be do business. So it is called as pure holding company. It's very nice. It's just holding. It is not interfering. Whereas not always it's the case. If I tell you of mixed holding company, sir, what do you mean by a mixed holding company? So it is a holding company which not only holds majority shares but also involved in the operations of the company. Participates but also participates in the business activities. Classic example is of Alphabet and Google. So if you know, Alphabet is the holding company, it is a parent company. Alphabet is a parent company and Google is a subsidiary. So we all know that Alphabet has a degree of control. It controls the operation, it dictates the terms to Google. So then we will say it is a mixed, not a pure holding company, it's a mixed. It has control as well as it has interfere and also participates in business activities of them. Now coming to another type of holding company called as intermediate holding company. Intermediate means what? Middleman. Middleman. Very simple. So it is a subsidiary also and it is a holding also. So if you see a structure, you will understand. So first let's read the definition. An intermediate holding company is both a holding company of another company and a subsidiary of another company. So I have a holding also and I am a controller also. So we will be calling as intermediate. Why? Because there is someone above me, there is someone below me. Let's take an example. Okay. So what is the example? Let's take this. There is Oracle Corporation USA. It has a subsidiary which is Oracle Global Mauritius, which is also controlling a company called as Oracle Financial Service Software Limited. From here, can you tell me which is the intermediate holding company, which is also a holding and also a subsidiary of someone? So obviously this company will be called as an intermediate company, which has a holding also and which has a subsidiary also. So just from point of view of a structure of a company, we say this guy is the middle guy, he has someone above him, someone below him. So this is called as an intermediate company. Now let's talk about immediate holding company. Now what is the meaning of a immediate holding company? Immediate means just above me who is there, just above me. I don't care of anything else, just pinpoint above me who is there. There is no other layer between us. That means I'm the subsidiary and he is my holding, there's no one in between. So a immediate holding company directly owns the subsidiary and is not itself directly owned by a parent company and is itself directly owned by a parent company. There is no additional layer or intervening layer between us. So let's take an example. This is the parent company, okay, and we have company A as the wholly owned subsidiary. This is partially owned, this is a subsidiary. You can nowadays, let me tell you, you can even be a wholly owned subsidiary. Sir, what do you mean by wholly owned? Where the holding company holds 100% of the shares in the subsidiary, it's a wholly owned subsidiary. Another example is which is called as a subsidiary which or a partially owned, where I'm not holding 100%. Now let's see, what is this immediate holding? If company A owns company B and company B owns company C, so A owns B and B owns C, okay, B is the immediate holding. Now we are talking from B is the immediate holding of C, because there is no relation, no further division between B and C. Similarly, for point of view and A and B, for the point of A and B, if we see between them, B will say my immediate holding is A, C will say my immediate holding is B, B will say my immediate holding is A. Who is just above you, that is called as immediately. Right above your head, who is there? That is your immediate holding company. So all of them can say that, listen, this is my immediate holding company. Now we are coming to wholly owned subsidiary. Now pay attention, we did one part. I can control either 100% of your shares or partly owned. Normally when we say wholly owned subsidiary means what? Now we'll be doing the concept of wholly owned subsidiary. Can you give me an example of wholly owned subsidiary? So if you go to see Tata and Jaguar company is 100% owned, 100% ownership is with Tata's. So it becomes a wholly owned subsidiary. Similarly, another example I'll give you. A wholly owned subsidiary is entirely owned by the parent company. Like Disney owning Pixar Animations. So Disney is the holding company and Pixar Animation is the subsidiary. The parent company will hold all the shares of the subsidiary. So parent company holds 100% shares. So this will be called as a wholly owned subsidiary. Okay. Now we'll see wholly owned subsidiary and section 89. Now the question arises, now pay attention, just a few situational questions about this. The question arises how a wholly owned subsidiary can be treated as a minimum number of shareholders must be 2. Now, see. Now pay attention, it is just for your understanding. I have dealt practically also with companies which are wholly owned subsidiary. But if you go to see, this violates the minimum number of shareholding, yes or no? In section 3 subsection 1 you have the minimum number of shareholding, minimum should be 2. So how can 100% of the shares be held? Can a wholly owned subsidiary ever be possible under law, under Companies Act? 100% owned means there is only one member. So answer is, listen, it is ideally they call it as wholly owned subsidiary, but they create another nominee shareholder. For example, there was a foreign company which I was dealing with. So what happened? The foreign company was there, company A. It was holding shares of company C. Okay. Now this cannot hold 100% shares by law. Why? Because 100% shares means there is only one member, and in private company you require minimum 2 members. So in that case what they do, company A will create a company B which is like a nominee shareholder. What are they? Nominee shareholder, just for the namesake they make, and one share is only hold. Only one share is held by them, and this could be the holding. So they are the holding, and this could be the subsidiary. So through my subsidiary I am holding one share. Still this will be called as 100% subsidiary, wholly owned subsidiary. So this is the structure. So many times you will see now, if it is a wholly owned subsidiary, you will go into the shareholding, you will see 2 members. One will be the main one and another one which is just created for the legal formality. Clear? So accordingly this will be just a nominee shareholder. They will say, listen, I am just a registered shareholder, but in reality all my shares are held for the beneficial owner is someone else. So company B will say, listen, I am just holding for beneficial interest of company A for the sake of complying with some legal compliance. So this is what has been mentioned. Okay. So this is how the structure will always look. Always wholly owned subsidiary will look. There is a holding company, they will create a nominee. The nominee will also hold some shares, and the holding company will also hold some shares. Clear? Very important. Practically you will come across such situations. Now comes when we say control, I am able to control. So section 2 subsection 27 talks about control. How can I control someone else? So control could come through voting rights. Control could come through some agreement, shareholders agreement, loan agreement, or by any other means, investment agreement. So if I have a right to appoint majority of the directors who run your company, so I am controlling the company. I control the management or the policy decisions by virtue of any agreement, management right, shareholders agreement, or any other manner. So control can be with the right to appoint majority of the directors, or I control the management or the policy decision with the help of certain rights or agreements. Some rights I have got, some agreements I have got. Pursuant to that I can control. So then they will say that yes, you have control over the company. Now we'll do another important concept which is called as associate company. Now, associate company is defined under section 2, subsection 6. Now, associate in English, in simple English, means a friend. Okay, so let's see. Associate means my friend. Let's read the definition. Section 2, subsection 6 says that the associate company in relation to another company means a company in which that other company, so there is another company which has significant influence, okay, but which is not a subsidiary of the company and includes a JV. So it does not include subsidiary, but it includes a JV. So let's see. What do you mean by an associate company? Section 2, subsection 6. They say that a associate company means a company in which the other company has significant influence. So there is a significant influence exercised by some other company. So there is some other company which is exercising significant influence on me. So then an associate company will be there. Now, what do you mean by significant influence? They have also said how much percentage holding is there. So percentage, significant influence means, now pay attention to the lines also. Significant influence means controls at least 20% of the voting power, or controls of or is in participation of any business decision under any agreement. So if I have control of at least 20%, or I participate in business decisions, I control the business decisions, it will be said that I have significant influence. Two things, sir. What has been given? Significant is what? If I control or I can control the business decisions of the company, or if I can control 20% of the voting rights of the company, I can say that I have a significant influence on the company. Clear till here? So associate company means a company which has significant influence over another. Now there is one important thing, let me explain. Okay, and it includes a joint venture. So very important. Now from here we will say it includes and excludes. Okay, so it includes something, and it excludes something. So it includes JV. So whenever there is a joint venture, obviously those companies can be said that they have a significant influence. And second, it excludes holding subsidiary relationship, because holding subsidiary require more than 50. So can I say that in an associate company you must be holding at least 20% to 50% stake? Because moment if a company has more than 50%, the relationship, the terms change. It will be called as a holding subsidiary relationship. Understood? That if earlier what used to happen, that if someone had majority shares, we could say holding subsidiary. So let's take an example. If company A had majority shares in company B, they had 51% shares. So we would immediately call this relation as something. We used to call it as the holding company, and this used to be called as the subsidiary. Yes or no? If you just had majority shares. But now they are saying, listen, even lesser than 50. So which is not a holding subsidiary, but less than 50. So they are having up to 50 majority. And more than 20. So that much impact also. So if company A has 20%, at least 20% to 50% stake in company B, then we can say that, listen, how this is a subsidiary company. We will say, listen, this is exceeding 20 but not making it a wholly subsidiary relationship, means it is up to 50. Then during this time we will give, as we give you a subsidiary company, here we will call it as a associate company. So if I come to know that if another company is holding 20% or more stake and not a subsidiary, then it will be called as a associate company. Clear? So now pay attention. This will be called as an associate company, and this normally you can call it as a controller or controlling company. It's just a normal word I will controlling company. This will be a associate company. So here we will first name this as company B is a subsidiary of company A. Similarly, here we'll write that company B is an associate of company A. Why? Understand? Whatever company A wants to do, it can make company B do. That is why we'll say that company B is an associate of company A. Company A can do something and it can make company B also do. So company B will have to follow what company A is saying. So company B is an associate of company A. Instead of subsidiary, they gave it another word called as associate. But remember, the reverse is not true. Reverse is not true. Company A cannot be called as a associate of company B. Company A is not an associate of company B. Why? But in this relation, company B is an associate, but company A is not an associate. If I am controlling you, then I can make you do something. Na? You don't have any shares in me, so you can't control me. So that is why I am not your friend. You are my associate. I am not your associate. You don't have any control over me. So therefore, company A is a controller. It is not the controlled. Controlled is associate. Clear? So company B is controlled by company A. Company A, by virtue of this, is not controlled by company B. Concept clear? So it's not a two-way thing that if it's an associate and this, so then both are associates of each other. Answer is no. One will be an associate of another. Which one you should know? So company B will be an associate of company A. So company A is the controller. It can make company B do whatever it wants. Similarly, company B is a subsidiary of company A. Clear till here? Concept clear? Yes or no? Okay. So very, very important. You have to note it down. And joint venture is there. Is a joint arrangement between the parties who have joint control, okay, to the net assets of the company. So sometimes let me explain of a joint this company. So let's say if a company is there, company A is there, and company B is there. Company A and company B is there. Okay. Now they all create a JV. They create a JV. 50% is held by company A and 50% is held by company B in company AB. So can we say it's a holding subsidiary relationship? Yes or no? Exact 50-50, huh? 50-50 it is there. So is it a holding subsidiary relationship? Holding subsidiary? Answer is no. In holding subsidiary require majority. Here both are having equal. So what you will call? You will call them as associate. Now both will be associates. Okay, so then this is a relation of associate companies. So because you have both have more than 20% stake, so this will also be an associate company. This will also be an associate company because both are controllers. This is also a controller. This is also a controller. And whom they are controlling? Whoever is controlled is the associate company. So company AB can be said to be controlled not only by company A, but it is also controlled by company B. So company AB will be a associate of company A also. Wherever company A says to go, company AB will go. Even it will be of company B also. So whoever is holding 20% or more, the associate relation will arise. Clear till here? Yes or no? Okay. That's why they said it includes a JV. Significant influence, as we saw, significant means what? 20 to 50. Because they have said it should be at least 20 and it should not be a subsidiary. Because to be a subsidiary, it has to be more than 50%. So it will be minimum 20 and maximum 50. Okay, so here I've given an illustration. Now let's see if you have understood it. Company A owns 30% of voting rights of Company B. Company A owns 20% and 50% of Company B. Between 20 to 50. So now who is an associate of whom? So and who has significant influence? So thus Company A has significant influence over Company B. So Company A will have significant influence over them. Therefore, Company B is considered as an associate of Company A, where Company A is the parent or the controller and Company B will be its associate. Clear till here? Yes. Okay. Will be called, in this scenario, if it has significant influence, then B is the associate of A and A shall be its parent company. Now difference between associate and subsidiary. Very simple. Once a subsidiary is there, then it ceases to be a associate company. So let's take for example, once you become an adult above 18 or you touch a threshold, then you're no longer called as a child or an adolescent. Yes or no? So once you cross a certain threshold from associate, your name will only change to subsidiary. So for subsidiary, it has to be more than 50. This can be max 50. Okay, then you'll write the section number. This is section 2, subsection. Associate is subsection 6. This is section 2, subsection 87. Okay, the parent company has a significant influence. And here we have controlling power, majority influence. Okay, that's it. They may be in presence of certain number of common directors. They control the management. Fine. Now, when we see now compliances with respect to related associate company. Now, in your company law, when you read, many times they say that, listen, why is it important? Because once I come to know that this has between 20% stake to 50%, then all their details also disclosures have to be given. Sometimes we tell that their financials should also be added. Related party transaction with these companies also has to be informed. So we will see. Related party transaction. Section 2 subsection 76 says that if a company is having a transaction with its associate, it will be termed as related party transaction. Includes associate company. Hence, when a associate company will require disclosure of related party transactions when they are doing it with the holding company. Associate company details should be provided in annual return. Again, so in annual return, which is there, we have to give details who all we are holding 20% shares or control in, just like we issue for your subsidiary. Like that, they have started saying now for all your associates also you tell where you're holding 20 to 50% stake. Consolidated financial statement shall also include that of associate company. Then section 192, if the directors of an associate company wants to do any non-cash transaction with the company, they need to file an ordinary resolution. So again, all these sections when you will read about, they will mention associate company, you need to know the meaning. So the directors of an associate company want to do any non-cash transaction with the company, then they need to pass an ordinary transaction or ordinary resolution. This is given in section 192. So a non-cash transaction, for example, we want to sell some goods and we don't want goods for goods. No cash is involved, goods for goods. So they say, listen, pass a ordinary resolution. You're doing it with your associate company. Let the shareholders know about it. Okay, then section 149 subsection 6, independent directors, where they say that I will appoint an independent director. Independent director means unrelated directors when we are appointing. They should not have any connection with the holding associate or subsidiary. So they give HAS they give that a independent director when we are appointing. Now you will come to know as you do the director's topic also, but just understand it's a provision for associate companies that when we are appointing a company, when we are appointing an independent director, independent means he's independent, not anywhere connected with the company. So we will say that you are connected if you are appointed of a holding, if you are a director of a holding, or you are a director of a subsidiary or a associate. So if you have any relation with the holding, associate or subsidiary, you will be deemed to be connected with the company. Okay. So we are done with the concept of associate company. Now we'll see a concept called as of investment companies. What are investment companies? So investment company could be a company like Berkshire Hathaway, the world's richest man who was there, Warren Buffett. What is it that he is, investing? His company invests. Motilal Oswal, their job is to invest. Okay, so they collect funds and then they invest in stock markets with the objective of buy at low, sell at high, or in derivative transactions, sell at high, buy at low. So these are investment companies. Investment companies make investments in stock markets. Then return is distributed. So let's see the definition. Definition of investment company is shocking. It's not given in any section of 2. Section 2 normally contains the definition. It's given in the explanation to section 186. So explanation to section 186 defines investment company. It says it means a company whose principal business is acquisition of shares, debentures or any other securities. So whose principal business is to acquire shares, debentures, securities. Now, what is a deemed investment company? Market is important. Very, very important. Okay, what is a deemed investment company? First, I've finished what is the definition of investment company. Their principal business is acquisition of securities, buy and sell. Now, what is a deemed investment company? See, what do you mean by this? If we find a company whose majority income or assets are related to stock markets, if their majority income is coming from buying at low and selling at high, or their majority assets are of stock shares only, so we'll say, listen, they are not really doing any other business except investment in stock markets. So a company will be deemed to be engaged in the business of acquisition of shares and this if 2 tests are there. There is an asset test. So asset test and income test. How many tests are there? So we'll see what is a deemed investment company. So there are 2 things. There is a test. There is a test. One is a asset test and the other one is a income test. Okay, let's see. So if the assets in the form of investment in shares, debentures are not less than 50% of the total assets. So if we find the assets if we go in the balance sheet, where you will see the assets? Balance sheet. When I open the balance sheet, I say there is no land, building, plant, nothing is there. All the assets, at least 50%. So minimum 50% are in the form of assets. Minimum 50% assets are of stocks, stock market securities. Then it will be called as deemed investment company. Or 50% of the income is coming from stock market. So again, this is one thing. If income is derived, if 50% of its income, not less than 50% of its income is derived from investment business, constitutes not less than 50% of the gross income. So this is minimum 50% of net assets. Your 50% income is coming from investment business, investment in stocks, shares, etc. 50% of gross income. Gross income is coming from investment business. Then it will be deemed that listen, your majority you're doing investment to me, or a deemed investment company. Simple. The following two sets of legal opinions are there. So this is a very, very important. Assets and income test. So either net assets, so your 50% of your total assets are stocks, or 50% of your gross income is coming from investment business, then you're a deemed investment company. Now there are, for investment companies, they come that listen, investment company, they buy at low and sell at high. So is this an investment company? Answer is yes. Okay. Whereas the other one is another school. So one legal thought is they intend to earn income only by holding them. So one school of thought, one legal opinion, that investment companies just want to hold for long term. They want to hold for long term. Whereas this is both, or everything. So the second legal opinion is much correct, where you're dealing with holding as well as dealing. So you're holding the stocks as well as trading. So the second opinion is much more correct, where we say, listen, this company can do intraday also, they can do swing trading also. What is swing trading, sir? They don't do same day, they will do in 3-4 days. They can also do something called a long term. So there are different kinds of trading that can be done. So all can be done by investment companies. So the second school of thought, which believe that an investment company can do intraday, long term, short term, everything, they hold, and they are holding for long term as well, they are doing trading. Both will come under the investment company. Now we'll see what do you mean by the term dormant companies. Now dormant companies, from the name itself, it means dormant means sleeping. So sleeping, in more appropriate terms, we'll call it as inactive companies. We call it as inactive company. So normally, as per Companies Act, if a company is dormant, inactive, and the ROC finds that listen, it's inactive, so they normally consider it as shell companies, fake companies. They strike off, they remove the name of the such company, they strike it down. That listen, if you don't want to do business, shut it down. So ROC has a power to strike down companies which have become defunct, non-operational. But sometimes, for genuine reasons, for genuine causes, also there can be a company which is non-functioning for some time. So here what happens, the company themselves, they inform the ROC, listen, I am a inactive company for a short period of time. I will become active really quick. Don't think that I am a shell company. I am doing manufacturing activity. It will take time. I'm doing some legal compliance. Don't strike me off. So there are some forms. Forms are in MSC forms, MSC 1, 2, 3, 4, 5. The rules are in Company Miscellaneous Rules 2014, and the section for dormant companies, section 455. We will see. Now I'll tell you, the provision is very simple. Your form number MSC1. So a company, maybe it is holding, they got a good rate for a land, or they have got a good property. They will immediately book it now. They will say operation will start in 6 months, 1 year's time. It will take time. We will get the licenses, etc. So they will do it. So they will file a MSC1. Moment they file an application, this application is to obtain the status of dormant company. Listen, don't strike me off. I'm going to be inactive, and this is the genuine reason why. MSC2, the ROC will realize, okay, fine, he's going to start the operations. Some manufacturing activity is doing, some, whatever XYZ license he's waiting for. So I'll say, okay, fine, ROC will give the certificate in MSC2. But I will tell, come here, every year you keep filing of what all transactions you're doing. So MSC3 return has to be filed by a dormant company every year. What return they will file? Okay, they will file that what all is there, who all are there, etc. Okay, about their accounting transactions, etc. MSC4, application for seeking status of active company. So now once your dormant company you're there, now you want to become active again. Okay. So I think there is some noise. We'll just wait here. I'll restart in some time. Okay. Just okay. Give me 2 minutes. Is private okay? Now I'll take on your questions. If you have any questions, please put in the chat box. I will take it up. Okay. Till that noise is coming, whatever. Uh, I want to know from you any doubts or any questions you all have. Okay. Any doubts or questions? So is private company not applicable for MGT 14? Private company has to file MGT 14 whenever they take a special resolution as well. Okay, 117 and 179 kindly define, sir. Can't understand. No, so they have to 117 they give you the form number in that thing. Whenever they pass a special resolution, whenever a company takes a special resolution, MGT 14 has to be filed. This is given under section 117. 179 is about loans, powers of board of directors. Okay, so that is for BOD. What all powers they have. So that is covered in my BOD chapter. Then MOA, AOA, alteration, incorporation, business entity. Okay. Only these. Okay. Any other question? Now I came. Can anybody say what else has been covered today? Okay. Sai Darshini, you should be on time. Okay. We were waiting for you. Okay. Next. Okay. So this all is there. Let's resume the class. Okay. Okay. Nice. Now we'll see the forms for dormant company. In MSc 1, it is an application made to the registrar to obtain the status of dormant company. So for example, if my company is a dormant company or I want to apply, so I'll apply in MSc 1. ROC will give me certificate in MSc 2 that listen, you are a dormant company, now go be happy. But they will tell, wait, come here. Every year you have to file a return about what transaction you have done, any activity you have done, okay, about the status update. So that will be given in MSc 3. Then later when my company is ready to be active again, I will file an application in MSc 4. Application for seeking the status of active company. So I'll make an application and make my company active again. In MSc 5, I will get a certificate of active company. They will say, okay, fine. So MSc 1 and 2 is filed initially. Then 3 is given every year, and when you want to get active status is 4 and 5. Application is given here, certificate is given here. Application is given here, certificate is given here. Clear? Very simple. Okay, so now let me explain the definition. Very important, very, very important. Okay, sir, what do you mean by dormant company? So dormant company means an inactive company, but we'll go as per the definition. Okay, the definition is here, we will see in some time. Let me explain. A dormant company means a company which is inactive or inoperative, not carrying business activities. Sometimes there are genuine reasons why they are not carrying business activities, pending license, or they got a property at a good rate, so they have booked it now. Third is to hold any intellectual property rights. They have some technology they have right now, they have bought it, they will use it later, patent registration is pending, so activity will start. Manufacturing businesses are there, so you don't directly start manufacturing activities from the first day of incorporation, right? You will say, listen, the land is there, the plowing is going on, factory is going to be constructed, the real business will start after 1 year. Okay, so they will apply to the registrar to get the certificate of dormant company. So from active, they will be treated as a dormant company. What is a dormant company? A company where a company is formed and registered, maybe for a future project. So the project will start in 2027. It's a future project. Or to hold an asset or an intellectual property. So I got a good rate, I've immediately bought it, I will start the operation and utilizing it at a different point of time. So I'll inform the ROC, I'm getting a good deal now, I've booked it. I will make the arrangements to start the business after some time. And so obviously there is a future project, or you want to hold a property, and you have not done, dormant means what? You have not done any significant accounting transaction, and no significant accounting transactions are done. Now significant accounting transaction, no major sale, purchase, nothing has been done. Such company can apply to get a dormant status in MSc 1 to the ROC. Now when we say inactive means what? I have been inactive. So here they have used the word inactive, right? So they have said inactive means a company which has not been carrying on any business or making any significant accounting transactions for during the last 2 financial years, or has not filed financial statements or annual return during the 2 financial years. So normally we say that ROC will give a certificate of dormant companies to inactive companies. So what is inactive? So firstly, they should not have any significant accounting transaction. No big purchase. They've also defined what is significant accounting transaction. I'll come to that. In simple words, it means that there is no transaction done other than those which are required to comply with the act. So under the act, what you have to do, comply with the bare minimum you are doing. So it is not a significant accounting transaction. Significant accounting major transaction not done for 2 years. So a company which has not been carrying on any business or any significant accounting transaction during 2 years, or has not filed any financial statements or annual returns in the past 2 years, accounts you have not done, financial statements you have not done, or annual return you have not filed for the past 2 years, then ROC can classify you as a inactive company. Clear? Initially I can only apply, but sometimes if these conditions are fulfilled, ROC can also say that listen, you are an inactive company. Now inactive company, either we can ask that what is the problem, or if ROC is not happy, he will strike off the company also. So significant accounting transaction means what? Only I've done transactions in my company which are required to be compliant under the act. For example, payment of stamp duty, registration, ROC fees, form filing fees, okay, allotment of shares, maintenance of office records. Only these transactions I've done. Apart from that, I have not done any transaction. So significant accounting transaction means any transaction other than payment of fees, payments. So this is the line: payments made by it to fulfill the requirements under the law, allotment of shares, payment for maintenance of records. So apart from this, you have not done anything else. So we say it's not a significant accounting transaction. Now, subsection 1 is done. Subsection 1 is about MSc 1, that a company can proactively apply to get the status of dormant company. In MSc 2, a certificate will be given take by ROC after doing investigation. Now, subsection 3. Now, section 455 subsection 3 is saying registrar shall maintain a register of dormant companies. So at any point of time, we will come to know that how many dormant companies are there in India. Okay. Now this is an inactive company which I was telling. Inactive company in the definition that they have given. What is an inactive company? Now without reading, you tell me. 2 years was given, yes or no? 2 years was given, and in 2 years they had given AR. They had given 2 years. They had given, and they had written A. They had written AR, and they had written one more thing. What they given? Financial statements. So in case a company which has not filed financial statements, annual returns for 2 consecutive years, ROC shall issue a notice to them and enter their names in the list of dormant companies. Okay. Now, so very simple. We are done with this, that ROC will identify inactive companies and then issue a notice to them. Now subsection 5. A dormant company shall have minimum number of directors as required under law. So what is the minimum number of directors is required under law? So if you read your section 149 of Companies Act, they say that private company requires 1, public requires 2, and your minimum number of directors that they have to maintain. Okay, they need to have 1, 2, 3. OPC 1, private 2, and a public company requires 3 directors. A dormant company shall have the minimum number of directors. Done. But I told you they always have to file a return every year. Okay, and it has to be signed and audited by a chartered accountant annually, indicating the financial position within a period of 30 days from the end of the financial year. Moment the financial year ends, within 30 days, 30 days from the end of the financial year, the MSC3 will be filed, audited by a CA. Simple. Okay, they shall keep doing it till they get the active status company. Now they said that one line, that where the company shall continue to file the return of allotment and change wherein whenever the company allots any security or any person, or there is any change in the directors of the company, the company shall continue to file the return of allotment or change whenever the company allots to any person or there is a change in the directorship. So we know return of allotment is there. Okay, return of allotment is in PAS 3 company law. When you'll read, you'll come to know PAS 3. Whenever there is a change of directorship, DIR 12 is filed. So these are some returns that need to be filed. DIR 12 is whenever director change is there, and PAS 3 is whenever we issued certain shares or stocks or securities. All this though has to be filed, which is as it is mentioned. Now, without telling, can you tell me what is MSC 4 for? 4 and 5 is where you apply for active. A application for dormant company status shall be filed in MSC 4, accompanied by MSC 3 annual returns. The certificate for allowing active status is given in MSC 5. The ROC shall strike off the name of dormant companies from the register of dormant companies if they fail to fulfill the requirement of the act. Okay, now what are the requirements we will see? Now, Companies Miscellaneous Rules 2014. Now, Rule 3 says prerequisites for obtaining the status of dormant company. If I want to get dormant company status, what are the requisites? Now, you tell me one thing. Can the board of directors apply, or it is the shareholders will have to apply? So again, very simple. The shareholders will pass a special resolution. A special resolution. 3/4 of the consent of the members will be taken, and then they will file MSC 1. So they will make an application after taking special resolution. Okay. Now, a company can be eligible to apply only if, now let's see who can apply for dormant company. So if a company is falling under any of this, they cannot apply. Imagine there is an investigation on you, there is a prosecution on you, you have failed to file public deposits, or you have an outstanding loan has not been paid, or there is a dispute with your thing. So then they can say you cannot apply for dormant company status. So dormant company status can only be filed by when there is no issue with the company. Then we will say, okay, fine, you can relax, continue. So a company will be eligible. Eligibility is only if there is no inspection going on, there is no prosecution pending on the company, they have neither defaulted in any public deposits, okay, there is no outstanding loan, there is no dispute, there is no dispute of taxes, there is no defaulted in the workman dues, and they are not listed on any stock exchange. So let's take for example, if there is a listed company, can a listed company apply for dormant company? They'll say, what nonsense, you're a listed company, taken money or so much crores from public, how can you be dormant? That is not available to listed companies, whether listed in India or anywhere else. Okay, so we are done with almost all the parts. Now only one type of company is there, which is Nidhi company. You go open your financial service organization book. So in your setting up chapter, there is a chapter called as financial service organization. In that there is Nidhi companies, and somewhere in the start also it is there about Nidhi company. Look in your index. I think in company law also they have mentioned about Nidhi company. I want you to open both of them in one go. I will finish both. So Nidhi company is what I'm going to do now. It will cover your two modules, Nidhi company, and from all the chapters. Once only in depth I'm going to finish Nidhi companies. So I want you all to just tell me whether everything is in place. Okay? Yes or no? I want in the chat box, is everything sorted? Open up both your modules, setting up and uh, your company law. Wherever there is Nidhi company, note it down. From just keep both the modules open. You see, I'll finish both. All the topics from everywhere. Yes, types. But private company, I have read that private company is not applicable. Okay, so I'll just recheck it, reconfirm it. Okay, because okay. So first you open this Nidhi company topic and keep both ready. Okay, so just give me 2 minutes. Once we come, we'll finish off with Nidhi company. I'll explain you in the most easiest, simplest, and you will never forget it. Okay, the entire concept of what is there, and since there was amendments also, I've covered the amendments also. Okay, Nidhi company, objects of the act. Then let's see what is a Nidhi company. Okay, I'm just seeing. Okay, so this we will just start in 2 minutes. Nidhi companies minimum paid up capital has changed. Redemption. Then objectives in the MOA. Name Nidhi companies. Then again, what all is given? Okay, just seeing. What else is given? That minimum number of members, net owned funds, sorted unencumbered deposits, net funds ratio, net owned funds to deposits. The net owned funds. We're almost done with everything. Prohibition. Except deposits are lent to any other members, pledge the assets. What else is given? Advertising and solicitation restriction. Maybe noted. Issue any this. Brokerage. Then share capital. What all is given? Nidhi company shall ensure that. Then branch. Did you all know about the provision? Just put in the chat box whether you all know about Nidhi companies and all of this. Okay, then I will tell you. Branch requirements. Secure approval of the RD. Quite a lot of stuff is there. Okay, so I'll be finishing. You all can read through. We will start in 5 minutes. 5 minutes max. Just the minimum balance in the saving account that qualifies for interest cannot exceed 1 lakh with an interest rate not exceeding. Okay, so we'll just start it in 5 minutes. What is the time now? Just maybe 10 minutes and we come back. Okay, we just start in 10 minutes and I'll finish Nidhi companies. You all can read through the Nidhi provisions as of now. Okay, in 10 minutes we'll start with the Nidhi company provisions. Hello. Okay. Am I audible and visible to you all? Am I audible and visible? Please put in the chat box. Okay, then I'll just start and finish off this Nidhi company. And you can take a book and pen, note it down also, and I will explain this point very well to you. Just need one last little part for you all to tell me whether I'm audible and visible, and then I will start and complete it. Yes or no? Monisha, am I audible and visible? GTG, yes. Okay. Sai Darshini, great. Okay. Sona, Monisha, great. Vidya. Okay, let's start. Hi. So now we'll be understanding the concept of Nidhi companies in detail with the characteristics, with their formation, and everything with respect to Nidhi companies will be completed in this session. So first of all, let me tell you what are Nidhi companies in very simple words. So Nidhi companies are nothing but a special type of non-banking financial companies. So Nidhi company is a NBFC. It's not a bank, but it finances. It gives a finance, it gives money, it gives loans, but these don't have banking license. Now, Nidhi companies are registered under the Companies Act under section 406. Clear? So section 406 covers about Nidhi companies. Read with your rules, Nidhi Company Rules 2014, and in company law you have your chapter number 26 which governs Nidhi companies. Okay. Now Nidhi companies do not give loans to anybody. First of all, these are also called as mutual benefit companies. Mutual benefit companies. Now I'll explain how is the working of a Nidhi companies. So first, there are certain memberships. So membership has to be taken where these members will deposit certain funds. So members will be there. Okay. These members will put in funds into the Nidhi companies, and then Nidhi companies will further give loans. And loans will be given to the members only whenever they need them. So a Nidhi company, if you go to see, their earnings are two ways. One is their members initially deposit the funds and then they give loans to the members. Now, whenever they give loans to the members, obviously it's a loan. So the members will return with principal plus interest. They will return the money with principal and interest. This interest is the earning to the NBFC. Okay, this interest is the income to the NBFC. One. Second, when these members are giving money into the NBFC, this creates a thrift of savings, a habit of savings. It creates a thrift or a habit of savings. Now, why is it? Pay attention. Normally, I would have used up the money. Small players who don't have much money, they would ideally waste the money by spending on certain things, etc. We do not give them income. So with Nidhi companies, they prefer to invest the money. Now when they invest the money, they no doubt get interest also. Interest on deposits is also given. Okay. And a Nidhi company will ideally, how will they earn? Now this is a Nidhi company. The Nidhi companies will have deposits from members. Deposit from members. Okay. Now from members. So now when they get deposits from members, they will issue interest. Let's say they are giving an interest of 10%. Interest on deposits is given. Just like how banks operate, right? They give a FD of a certain amount, they take your money and they further give loans. They will give loans, but the loan will be given at a higher rate. Let's say they will give at 15% interest, loans will be given. But this loan will only be given to the members. So both ways. And when the member comes, it's like a proper loan. So the member will also have to provide security in case if he defaults. This security could be in the form of movable property, could be gold, silver loans are allowed, could be form of immovable property, some house papers, etc. Now ideally one would think that why create a Nidhi company? You would prefer to go to a bank to take a loan. Now normally banks, there is a very cumbersome process, lengthy process. Immediately it's not easy to get a loan. But if I know that it is a Nidhi company, I'm a member, I can very rightly go to the company and say give me a loan of so much amount. This is my security. So the terms and conditions will be decided by the Nidhi company. So it helps only the members. So mutual benefit company, it helps themselves only. This is also very funnily called as a self-serving bank. A self-serving bank. For example, I keep depositing and I keep getting interest. When I need loan also, I can get a loan also from here. Okay. Now here, very interestingly, the directors, since it's a company, there will be directors. Now directors also have to be members. Means this only, it's a closed group for the members. The directors will also be the members. The loan who are depositing money will also be members, and those who are getting the loan will also be members. Simple. This is the concept of NBFC and Nidhi company. Now Nidhi company, as you see, it is not a bank, but it can give finance. So it's a non-banking financial company. So this is how they operate. Now let's read the provisions what they have given. So Nidhi companies are NBFCs. They are engaged in the business of accepting deposits and giving loans. So they accept deposits from the members. They give interest at 10%. Then this further will be given as loans to members, whoever needs them. The primary objective is so that the people from lower class, etc., who maybe would have spent the money, they prefer to make a deposit of 50,000, 1 lakh rupees, they can make a deposit. Okay, is to carry on the business of accepting deposits and lending money to the members only. To the members only. No outsider can interact with the Nidhi company. Only again jewels, mortgage of property, etc. So loans also has to be secured loans only, so that it doesn't disrupt the working one. Second is, a Nidhi company can never make a public advertisement for deposit of money. Only the members will deposit. So they can privately give a letter to someone, become a member, but not to the public at large. Next, very interesting, many things will come in as you'll come to know. A Nidhi company has to be a public company. It can never be formed as a private company. Now, this is not a new concept. From centuries, this concept is going on. But why go to other banks? We will only create a self-serving bank. Okay. The object is creating a thrift of savings by depositing money. Whenever I need, I will go. It's a principle of mutual benefit where you incorporated pool funds from the members, and only members can get the loan. So they never deal with non-members. Now Nidhi company is also called as a mutual benefit society. A Nidhi company is incorporated in the Companies Act and shall be a public company only. Okay. Nidhi means treasure. In Sanskrit, if you go to see, it means wealth or treasure. This is just the origin of the meaning of the term Nidhi. Now we'll see the provisions along with the rules. Section 406 covers Nidhi companies. A Nidhi company or a mutual benefit society, they call it as a mutual benefit company or mutual benefit society, means a company with the central government. Now again, very important, after you have formed the company, you will write it in the object clause that my job is my object of the company is to accept deposits and give loans, and we are going to function as a Nidhi company. One, that declaration has to be given and then central government will allow. So with the central government will be declared to be a Nidhi company. So you have to file an application for declaration as a Nidhi company. Once I have formed the company, Then I have to file a special form. Here you have the NDH4. So the receipt, now pay attention, what will happen is you will give an application to central government that please declare me to be NBFC after the company is formed. So only on central government declaration I can start operating and functioning as a Nidhi company. The central government on receipt of the application by the public company in NDH4. So application is made in NDH4 for declaring it to be a Nidhi company. Then central government will see if the company is meeting with the requirements and then declare. Okay. Nidhi company means a company incorporated as a Nidhi with the objective of creating a thrift of saving, a habit of saving among the members, accepting deposits and giving loans only to the members for mutual benefit. Very, very important declaration of Nidhi company. So a company, once the Nidhi company is formed, okay? Nidhi company is formed. So all the procedure for incorporating a public company has to be followed. Incorporation steps for public company has to be followed. Then in the memorandum you'll write it's a Nidhi company. Then this Nidhi company will apply to the central government in form NDH4. Very, very important. When they apply, they tell central government, please declare me to be a Nidhi company. On the declaration, you can now operate. Okay. In case if a company did not file NDH4 or any of the provision, then what happened? They cannot issue any shares only to anyone. So if the company does not comply with the requirement, they are not allowed to issue allot to anybody or apply for share capital. So they cannot file SH7 or PAS3. So if you have not complied with the provision, then you have two disadvantages. That means if you see the disadvantage is only so big that you can't function only. No return of allotment can be filed, that is allotment of share, nothing can be done, nor share capital can be done, created, increased, etc. So basically it's a mandatory thing to do it. Next, incorporation of Nidhi company. Now we're coming to Nidhi company special rules. Now we saw rule 3, NDH4 was rule 3. Now we are seeing rule 4. Now rule 4 is saying that listen, you need to have so much paid up capital, so much members, so much net owned funds. We will see so many directors should be there, directors should be members, all of it. So first we start with some important threshold is the paid up capital. Paid up capital has to be 10 lakh rupees. The minimum paid up equity capital. Sir, why equity? Nidhi companies are not allowed to issue preference shares. Shall not issue preference shares. So it's just a rule that we don't want any kind of fight that he has a preference and everybody is equal. So Nidhi company can only and only issue equity shares. They cannot issue preference shares. And minimum paid up capital, normally in company law, we don't have paid up capital requirement. Okay, it was there, it was cancelled. But for Nidhi company, yes, they need to have minimum 10 lakh rupees paid up capital has to be there. No preference shares allowed. That is why it will be only equity capital that will be there. Now let's say before the amendment, if there was any issued any previous preference shares before the commencement of the act, then they will redeem it accordingly. Not a problem, not as per the terms of the issue. So however they had issued these preference shares and whatever terms they had issued, that way they can redeem it. When before in Companies Act 2013 movement, it says the preference shares cannot be issued by Nidhi company. So what about the Nidhi companies which had already issued prior to the act? So then they will redeem it in according to the terms of the issue, that whatever issue terms were there, accordingly they can follow, that is fine. But after the commencement of 2013 act, no Nidhi company can issue a preference share. Simple. Objectives in the memorandum, I told you, they will have to write that we are a Nidhi company. Okay, and the objective is thrift of savings. This has to be there in the MOA. Name requirement. Okay, so as we see limited, private limited, here they have to write the word Nidhi. Okay, so Ajay Nidhi company or whatever, they will write the thing. Okay, so what they have given that in the end they will have Nidhi Limited. Now we are seeing rule number 5, the minimum number of members and net owned funds. Minimum number of members in private public company is how much? 7, right? Here they are saying you require minimum 200 people. Just read. This is a 200 people are minimum needed to start a Nidhi company. So every Nidhi companies shall within 1 year of incorporation have at least 200 members. Okay. Rule 5. Net owned funds. So net owned funds is how much? 20 lakhs. Sir, what was that 10 lakhs? It was the paid up equity capital has to be rupees 10 lakh rupees. Your net owned funds should be 20 lakh rupees minimum. 20 lakhs. So what are net owned funds? And so net owned fund definition they've given, it is paid up capital plus free reserves. Should be owned funds. Net owned funds are what? Paid up capital plus free reserves is your net owned funds. Here they have given what do you mean by net owned funds? Is the aggregate. Aggregate means total of paid up equity capital plus free reserves, and all fictitious things should not be counted. It should not count and reduced by net losses. Intangible assets should be not to be taken. Okay, and preference shares are also not to be counted in net owned funds, which is obviously not allowed. Clear till here? So net owned funds are paid up capital, paid up equity capital plus free reserves less your losses. So 20 lakhs, remember. Now one point is given about unencumbered term deposits. It's 10%. Write it there, 10%. 10%. Sir, what do you mean by that? So what happened? Unencumbered means what? No obstacle, no hurdle. It's a free, you can take and use. There's no issue. Unencumbered deposits of not less than 10% of the outstanding deposit should be done. For example, now pay attention. If rupees 100, okay, 100 has come into the members have deposited how much? Members have deposited 100 in the Nidhi company. Now what, can they give the full 100 as loan? Will it be a good practice that I have taken 100 rupees as deposits, the full amount I give it as loan? So you will say no, just keep some balance. Now what if someone comes to break their money, or they come to remove their money? It's a deposit, it's an FD. So someone can come to remove the money also. So we will say, as we have in banks have CRR, cash reserve ratio, SLR. Similarly, here also they said at least 10% of the deposit, outstanding deposit. So these are the outstanding deposits. How much deposits have been made? 100. So we have to pay 100, right? Sooner or later, whenever it matures. So 10% of that has to be reserved in some place like a scheduled bank, scheduled commercial bank. We make a FD. So Nidhi company will deposit this 10 rupees in a scheduled bank as a saving account, etc., which anyone will ask, we can immediately get this money and give it to them. So this is the 10%. So not less than 10% of the outstanding amount shall be kept in unencumbered deposits. Then comes net owned funds to deposit ratio. Again, they've given a ratio. If the net owned funds to deposits ratio is 1:20. So again, if we have 20, net owned fund should be 1. This is the ratio that is given. Okay. Of not more than 1:20. Okay, it should not be more than this because it doesn't look appropriate. Okay. Then you have your returns. Now very, very important. Moment a Nidhi company is formed, within 90 days from the close of the first year after its incorporation. So within 90 days from the close of the first financial year of its incorporation, Nidhi company shall file a statutory return in NDH4 along with the fees with the registrar duly certified by a company secretary in practice, CA or CWA. So a return that statutory compliance has been complied with. So NDH1 has to be filed, certified by CA, by a CA, CS, CMA. Okay, this will be done. So Nidhi company shall file a statutory form in NDH1 signed by a CA, CS, CMA that all the compliances has been done. This has to be done within 90 days of first year. Yeah, so NDH1 we saw, NDH4 we saw, now we are seeing NDH1. Now general restrictions and prohibitions, very very important. General restrictions and prohibitions of Nidhi company. So rule number 6. What all prohibitions are there? 2 prohibitions I can tell you. They cannot invite public because it's only for the members. 1. They cannot issue preference shares, which we just saw. They cannot do any other activity other than that of Nidhi business. Prohibited activities have been given. Then okay, so let's see. No current account can be maintained. See, when we are taking deposits, these deposits are like FD. So it's not like you put in now, tomorrow you want to remove. So how will we give the loan? So it is FD is taken. Deposits are for certain tenure. Prohibited business activities. So a Nidhi company shall not carry on the business of chit fund, hire purchase, leasing, insurance, acquisition of securities issued by any body corporate. Cannot do these activities. 1. Cannot issue preference shares. A Nidhi company cannot have current accounts. Saving account they can have, yes. Current account is what today you put the money, after tomorrow you want to remove the money. That is not what we are planning to give. Current account is just business you come and do. We want you put in the money enough so that we can give for a reasonable time, so we can give a further loan. Acquisition and control or limiting. So we cannot acquire any other company unless it has passed a special resolution in a general meeting and also obtain the approval of RD. So the Nidhi company cannot go on to acquire another company with their money unless special resolution and RD approval. Now next is, they cannot carry on business of anything other than borrowing and lending in its own name. They cannot do any other business, but providing locker facility, okay, that all is allowed. From such, not exceeding 20% of the gross income at any point of time. Not exceeding, maximum 20% of the gross income, this much they can do. It may provide locker facility on rent to its members, subject to the rental amount income that we give on rent and we earn from rent should not exceed 20% of the gross income of the. You cannot just give very expensive locker facility. That is why we kept a upper limit of 20%. Again, they cannot deal with non-members. We've already done. They cannot pledge any of its assets lodged by any of the members. Now I told you they can give a gold loan. Some member must have kept their gold and taken a loan. Some must have kept their silver and taken a loan. Some must have kept their property papers and taken a loan. Now with that money, once a Nidhi company goes, they cannot further keep it on loan, or they cannot keep it as security, cannot pledge it to anyone else. That obviously doesn't make sense, that all the security which is there, you cannot use that. Corporate interaction. So they cannot interact or lend money to any other body corporate, because here take money or lend money to any body corporate. So it is to members, humans, individuals. Okay. Partnership. They cannot enter into any partnership in borrowing or lending activities. So it's, if you see now, these are like small villagers, etc. What they do, they keep making so that from their salary they put it in deposit, they get a good interest rate also, and when they need loan, they have their home bank, they can go and take a loan from them also. Home, whatever, Nidhi company, they can take. Advertisement is obviously not allowed to public. They can do it only to private circulation is allowed. Brokerage and incentive prohibition. Now again, when you're dealing with your own members only and it is the same people, then there is no brokerage, etc. They cannot pay any brokerage or incentives for making deposit from members or deploying any loans. So you cannot take a commission for giving a loan to someone. So they are already members, they are eligible for making deposits and taking loans. Now coming to the next thing, share capital. When I open the balance sheet, I will see the share capital of Nidhi companies. So what they are saying, let's see. Okay. First is every Nidhi company shall issue fully paid up equity shares of the nominal value of not less than 10 rupee each. So very simple. They will issue fully paid up shares. Fully paid up equity nominal value of not less than rupees 10. So face value will be rupees 10 minimum. Okay. Minimum rupees 10, cannot be below this. No service charge will be levied on issue of shares. So whenever we are issuing shares, no separate service charges they are going to levy. Every Nidhi company shall allot to each deposit holder at least 10 equity shares equivalent to rupees 100 or shares equivalent to 100. So again, when we are allotting also, we will allot at least a minimum of rupees 10 equity shares or 100 rupees. So minimum 10 equity shares we will allot or of rupees 100. Okay, whichever is higher. So again, if there is a member, the Nidhi company is there. Let's say we have now I'm asking you relating to all the previous parts also we have done. Now there is a Nidhi company. We have to allot shares. So can you tell me the minimum face value from what we've read above? Face value is minimum 10. Face value. Now he says give me only one share. We said no. You cannot get only one share. It would either be 10 shares or shares worth or total shares worth rupees 100. So he says okay fine, give me 10 shares. So worth 100 is met, it is fine. Okay, so at least this is what they are saying. So any of this, so 100 shares worth minimum or 10 shares equity shares will be there. So this is minimum what they are saying. So I think it will be less. So hold at least this or this. So whichever is less will come. So even if 100 shares or 100 equivalent worth is fine. Okay, then comes membership. Now very, very important. Now normally in public company you require 7 members. Here you require minimum 200 and it should be there throughout. It should never go below 200. Minor cannot be admitted as a guardian or cannot be admitted as a member of a Nidhi. It may be noted that deposits may be accepted in the name of minor if they are made by a legal guardian. So deposits can be accepted from the guardian, but he cannot be made as a member. So through the guardian's name is fine. And one thing is only individuals. Okay, as we saw only members. So we saw that no company, body corporate, trust can be a member of the Nidhi company. So in Nidhi companies are people contributing money, getting interest on their deposits, and whenever they require loan they can get. Now we are talking of operations of a Nidhi company. Now Nidhi company would generally mean people of the same society, same area will do. So that is why Nidhi companies, they do not have too many branches and all that. Understand, what will happen is you, me, my friends, we will create a special pool and call it as Nidhi company. So they are saying that Nidhi companies can operate through branches. We'll see how much. A Nidhi company, that too branch may be made if it is consistently recording net profits after tax for 3 years. So 3 years profit you require, 3 years profit they require for a branch, separate branch made apart from the head office. Within a district, it is allowed to open max 3 branches. So max 3 branches, okay. In district also max 3 branches. In one area only normally Nidhi company and the members will reside, right? Because they should know who they are, meetings, etc. So max in a district they are saying 3. I say no, I want more than 3 branches. So they say fine, okay, this is also allowed. Within the district more than 3 branches are also allowed. Take approval of RD and file form NDH2. To open more than 3 branches outside the district, a Nidhi company must first obtain permission from the RD by submitting NDH2. And the Nidhi company must inform the registrar about opening each branch within 30 days. 30 of the opening. So RD also has to be informed and ROC also has to be informed. So RD approval is needed and intimation to ROC is required within 30 days of opening each branch. Now the question is, sir, I want to go into another state. Not allowed. Cannot be done. See, geographical limit. Branch cannot be outside the state no matter what. Nobody can give you approval to open a branch outside a state. Members will be close by only. They cannot go in another state. Not allowed. Compliance requirement before opening the branch. NDH2 and RD approval, ROC intimation. So file it with RDA. Registrar within 30 days of opening must ensure that its financial and annual statements are up to date and filed with the ROC. We saw within 30 days. Now if I want to close down also, I decide I want to close down. So while opening you're taking ROC approval, ROC intimation. So closing also, first you have to do internal from the particular company. They will only have to decide, BOD will have to decide. Second, RD will come in, and third, a public announcement will be done. So see, pre-closure approval and planning. So before closing any branch, a Nidhi company must have a board approved proposal for closure. Okay, they will also discuss that how the existing deposits will have to be given, the loans, how will we recover, etc. Those planning has to be done. Secure approval from RD while submitting from NDH2. Then a public notification will come. Once the RD has given the approval, the Nidhi company must advertise the closing of the branch in a newspaper at least 30 days before the closure to inform the public. Display a copy of the advertisement at least 30 days from the date of the advertisement publication. Understand what is happening is, we are seeing that while opening also you require consent and while closing also you require consent, and that too of RD. Regulatory intimation, the must intimate the ROC within 30 days of closure. So RD approval is needed and ROC intimation is done within 30 days. So this is both for opening and closing. The procedure is almost the same. Then comes acceptance of deposits, of rule given in rule 13. Now pay attention that we are accepting deposits. As I told you, these are FDs, they are fixed deposits. We saw that current account is not open, that you put the money and tomorrow you want to remove the money, that is not allowed. And now when you come to deposit, it will be a tenure, at least little bit, so I can further give a loan, so then we will earn, Nidhi company will earn. So the answer is 6 to 60 months. How much? Minimum 6 months FD will be done and maximum 60 months. So you will write it is how much? 6 months to 60 months. Clear? Next, recurring deposit. So that also can be done. That can be from 12 months to 60 months. Recurring deposit. Now what is a recurring deposit? If you go to see, have you ever done an FD? So when you go to do a FD, it is one time you go, you tell them this is my 1 lakh rupees, put in this. Second, I can go for a recurring deposit. This is my account. It is my saving account. I'll keep putting. Whenever 1 lakh rupees is built, automatically create a FD. So it is a recurring. So if I'm a salaried person, I know every month it gets done. So every time I don't need to go and tell them make an FD. Every next month also I'll go and make them FD. So what happens if I give them a recurring deposit form? Every time I give them that target is met, the amount threshold of money is filled, it will automatically create a FD. So in my bank, for example, I tell them 5 lakh rupees moment it is created, my automatic FD should be created. So that is automatic FD. This period is there. Now saving deposit, now saving amount. Now in your saving account, now FD money you can put. Now tell me one thing, you think and tell. FD if I put, it is a good thing. But in my saving, if I've just left money, is it good? In your saving account, you have not made an FD, you're not making an investment, it is a loss. Even to the NBFC, because savings, you can come tomorrow also and ask. So then what they say, and in current account, you don't get interest. So that is not allowed. But saving account, it is there. In your saving account, money is being built. So they will say that, listen, in a saving account, you can have maximum 1 lakh rupees. If you want make a FD, put a FD. You cannot just have more than 1 lakh. Now 1 lakh is a good amount to make it a FD. So here they are saying the maximum amount that you can have in your saving account, okay, cannot exceed 1 lakh rupees. Common sense, 1 lakh rupees, it is a bad investment principle if you are having money in saving account. Make a FD, make a investment, whatever it is. And in that saving also they are saying don't give too much interest. With interest rate not more than 2% of the saving of any bank account, any nationalized bank. So we will see what a nationalized banks are giving saving. You can give maximum 2% more. So in my bank, my account is in HDFC Bank. They are giving on savings, they are giving 6%. So NBFC can also give a interest on saving to 8%. Why 6 plus 2? Max not exceeding 6%. And how much can be kept in the saving? This rule I think should be made in every single bank also, not only in NBFC. Every single bank, that don't put more than 1 lakh rupees in your saving account. Make a FD or invest it somewhere. Now interest rate on deposits may offer interest rates also and recurring interest rates not exceeding the maximum rate prescribed by RBI for NBFC. Now coming to unencumbered term deposits. Let's see, rule 14. Now rule 14 is your investment requirement. Let's see. Now I'm reading, just see. Every Nidhi company shall invest and keep invested. I've already done this. So should I explain what I've said? In 10% should be in unencumbered deposits of total outstanding deposits. I don't want to explain again. That if I have outstanding, if a NBFC has received total deposits of 200 crores. So if my NBFC is there and I have received deposits, people have made FD of 200 crores. Out of that 200 crores that I have got now, I cannot give full as loan. Some amount, they are saying 10% of it should be kept in a scheduled commercial bank unencumbered without putting it on any risk, anything. I can remove it whenever I want. Why? Because tomorrow if someone has come to break the FD, etc., we should have money to give. So in an unencumbered deposit with a scheduled commercial bank of an amount not less than 10% of the outstanding amount. Now they've also given 10% of the deposits outstanding at the closure of the business on the last working day of the second preceding month. So I will see, they are saying the last business day 2 months prior to the current month. So whenever the business is closing, year is ending, 2 months prior, whatever is there, that much amount I have to have minimum in the your unencumbered deposits with a scheduled commercial bank. So if someone comes, breaks an FD, I will go to this scheduled commercial bank. I'll say my money is kept, like how CLR, SRR ratio works similarly. Temporary withdrawal condition. In case of unforeseen commitments, temporary withdrawal may be permitted with the approval of the RD in NDH2 for the purpose of repayment of deposits subject to the condition and time limit by the RD to restoration of the 10%. So sometimes if they have got an emergency, then they will say, let me remove it now, I will refill this 10%. So if there is an unforeseen commitment, temporary withdrawal is allowed from that scheduled commercial bank of the 10% also. But you require NDH2 to be filed. NDH2 is one form to take approval of RD. Directors in Nidhi companies have to be members. They have to be members. Very, very important. Now they can hold up till 10 years, term up to 10 years on the board. They will be eligible for reappointment only after expiry of 2 years of ceasing to be a director. So 10 years you are there, then 2 years is cooling period. After that again you can be appointed. You need to have a DIN and you need to fulfill the fit and proper condition. We'll see later, they'll come. You should be sound mind, etc., not be disqualified. We'll see that. Loans by Nidhi company. Now Nidhi company can give a loan. According to Rule 15, a Nidhi company shall provide a loan only through its members. We know. In case of joint holders, loan can be provided to the members whose name appears first. The loans will be given subject to the following limit. Now, can we give unlimited loans to a single member? Yes or no? So if you see, the rules are so nicely put across that it don't give excessive loan to one person. How much they are saying? If the Nidhi company has 2 crore rupees, total amount of deposits we have. So if the Nidhi company total deposit of the Nidhi company is 200 crores, 2 crores, then we can give maximum to 1% how much? 2 lakh rupees. So if we have total deposit, if in my pocket NBFC has 2 crore rupees, then to one member they can give max 2 lakh rupees. Similarly, if they have more than 2 crores, okay, this is up to 2 crores, this is more than 2 crores but less than 20 crores, then maximum loan that I can give to a single member is 7,50,000. Similarly, if it is more than 20 crores but less than 50 crores, then to a single member I can give 12 lakhs. And if I have more than 50 crores, say to a single member I can give 15 lakh rupees loan. So this is to a member. The loans given to a member shall not exceed the total deposits, how much they have given. So we'll see, 2 crores you have, 2 lakh rupees you can give per person. Now the thing is, a Nidhi company can make loss, yes or no? Obviously, as banks make loss when they can't recover anything because the security must not be in existence or there is a fraud, etc. So the Nidhi company might face a loss. So that time they are saying that very good provision. They have said that where a Nidhi company has not made profits continuously for 3 years, so 3 years loss making, then all the limits, they shall not make any fresh loan exceeding 50% of the maximum amount of loan specified above. So how much loans they can give? Fresh loans can not be given more than the 50%. So in the first case, this amount will become 1 lakh, this will become half. So what they are saying, that if a Nidhi company is making 3 consecutive years loss, then all these limits given, 2 lakhs, 7 lakh 50, this shall be read half, 50% only can be given. Very good provision. It should be there in every bank also. A member shall not be eligible to give any further loan if he has borrowed an earlier loan and has defaulted. So if a member has taken a loan and has defaulted, he is not eligible for further loans. Now, so can Vijay Mallya get a loan again? No. Once you've defaulted, then get lost. A Nidhi company shall give a loan to its members only against the following securities. Sir, what this means? Now, whenever a bank gives loans, they take securities. Here also we'll take security. Normally it is immovable property. After amendment, they have said even gold, silver, jewelry is also allowed. So I can take, a member can take the jewelry, keep the jewelry in front of the Nidhi company and take the loan. FD. If they have some FD, they have some government securities, that also insurance policy, that also they can keep as security and take a loan. The maximum amount, now when a Nidhi company can make profit, now this is a company, so they can distribute dividend. Max dividend that has been given, that can be given is 25%. So max 25% dividend can be given. Concept clear? This is rule number 18. Okay, so this is the amended limits. Earlier it was 20%, now they have increased to 25. Now rate of interest on any loan. Now very interesting. How much loan I can give, they have also pegged it, or we can say fixed it. So for example, if this is my Nidhi company, this is the Nidhi company, their job is to accept deposits and give loans. Now let's say if I'm accepting deposits, I will give interest. Let's say I'm giving interest of 10%. It's an FD, na? Members are making FD. So I'm giving interest. Now when I am giving a loan, now when the money that I get, the Nidhi company gives a loan. So they can give how much? They will give more than 10%, yes or no? The interest that they will charge, here the interest they are giving is 10. Interest charged on loans will be maximum rate what they were there. 10% is the maximum rate plus 7.5%. So it will be 17.5%. Sir, what? So what are they saying? 17.5%. So what are they saying? That the interest, the maximum interest on deposits, how much they are giving? 10% plus 7.5 can be there. So the spread is 7.5. So I'll read it. Let's see if you understand. So if you're taking deposits, you're giving deposits 10, then the maximum you can take on loan is not more than 7.5 above that limit. So the rate of interest to be charged on any loan shall not exceed 7.5% above the highest rate of interest offered on deposits. So on deposits, I'm charging, I'm giving 10. So the maximum amount I can do is 10 plus 7.5. Very simple, very nice. Nidhi company shall charge the same rate of interest on the borrowers irrespective of the class of loan, rate of interest, etc. And it will be displayed prominently on the notice board of the registered office and each branch office of Nidhi. So this is the same thing. If you notice on banks, they clearly mention that what is the interest rate and the tenure. This rate should be identified and put across. Okay. Now we are seeing the steps for incorporation of Nidhi companies. See, if you want to incorporate a Nidhi company, first you form a public company. The same steps you have to follow. Now the standard process for following a public company needs to be followed. Now additional thing is, in the object clause you have to write that it has a thrift of savings and Nidhi company business will be done. The company must include a Nidhi company word has to be written. Then once the company is formed, then they can still not start the operations unless they file a declaration in NDH4 within 120 days of its incorporation for declaration as Nidhi company. They will make it to central government. Then central government will see whether you have proper net owned funds, you have paid up equity capital, you have minimum face value is proper. Then they will give you a certificate. Minimum 200 members, net owned funds of 20 lakh rupees is there. Declaration of fit and proper person. Now NDH4, we've seen the declaration will be given that listen, our promoters and directors are fit and proper person. Now when I say fit and proper person means, does that mean that they have proper abs and they are extremely fit? No. So they have run some triathlon, nothing. So what is that? They are honest, they have integrity, they have reputation, they are not disqualified under law. Then they've given you a disqualification. They have not have any of the following: criminal complaint against them, okay, filed by any person authorized by the government, which the case is pending. There is not been charge sheeted by any enforcement agency like CD, ED, income tax. An order of restraint has not been given for debarment by any regulatory authority. Conviction has not been passed for moral turpitude and is not been declared insolvent. not an unsound mind, willful defaulter, fugitive economic offender. Such person is a director of 5 or more companies or declared as a Nidhi company, or is a promoter of 3 or more companies incorporated. So even the maximum number of directorships. So a person will become disqualified to be a director if he's a director in 5 or more companies incorporated as Nidhi. So max you can be a 4. Okay, because then you get disqualified, and promoter you can be max of 2, because 3 or more you become disqualified. Now central government review and approval. The central government reviews the form and conveys a decision within 45 days. If no decision is given, it is deemed approval. So after all this, they will waiting for the approval, then they will issue a notification, and from that day you can start the operations as a Nidhi company. So if we see some of the characteristics of Nidhi company, it has to be a public company, cannot issue shares, preference shares. It can only transact with members, nobody else, which is like a recap. They cannot operate pan-India basis. They can only operate in the district, and there they cannot go in another state. They need to have 10 lakhs paid up equity capital, net owned funds of 20 lakhs. Loans are provided only to its members, and that too they are fully secured loans. Unsecured loans cannot be given. So loans are given against gold, silver, immovable property, etc. Director of a company shall hold an office for up to 10 years. Then after 2 years, you have cooling period. 25% is the maximum. 25% is the dividend maximum that can be given. A Nidhi company shall adhere to the prudential norms which have been issued. Now, benefits of incorporating a Nidhi company. Now again, Nidhi company, you get a speedy disbursement of loan as compared to any bank you have to go. Since you are already a member, they already know you, they will easily give you a loan. Guaranteed loan repayment. Now in Nidhi company, what happens? It is a very safe company because it always secured loans that are given. And that too to members who you know. Second is Nidhi company generally, more than to make it attractive, more than the FD rate which is given in banks, they give higher interest rates on deposits. Credibility through leadership. Now in Nidhi company, if I'm a very active member, they will make me a director also, because we saw director cannot be outside director. Director has to be a member. Simplified regulation and very crystal clear regulations will make it a robust financial institution and safe. And that is it. We've completed the entire provisions of Nidhi companies in depth. Okay. So are we clear till here? How many members can be a director in a Nidhi company? That has not been mentioned. Okay. How many members can be a director? That is not there. Same company law provision will apply. That is max 15. So for everything else, the Companies Act 2013 will apply. So 15, as we saw, the maximum number of, what is your question? How many members can be a director in Nidhi company? So maximum number of directors, as we see in your company law section, 165, they gives you the maximum number of directorships that can be held. So here that will only apply, and 149 read with 165 will only be applicable. Nothing else has been specifically done. Okay. So with this, I have completed 2 chapters, 2 to 3 chapters, and very, very important ones. You see a dormant company is covered. So for students who are doing that old syllabus, dormant company is covered, 1 part C chapter. Then even foreign company is covered. Nidhi company is done from this, and so company law and setting up this particular 11 to 15 mark chapter is done. Now tomorrow so this is it for today. Tomorrow I will start with my other parts which I have done. So today I have covered this. Okay, now I will cover these chapters which are there. Okay. So I have, from the module you can do the markings which are there. This for the students in the full course, I will upload the notes. You all can study including the lectures. This lecture also, I will edit it and put it upload in the dream batch, because if you notice these chapters I have not done in the dream batch, so that is my priority to finish it. Clear? Any other doubts, any other questions you all have? Be a member of Nidhi company has to be taken. Yes sir, great. Thank you so much, Jency. Okay, and Santosh has asked a question. To be member of Nidhi company, deposits to be taken or they will issue shares? Okay, so first is the share capital. Share capital is done at the initial, and then the normal deposit provisions will come. So initially, yes, share capital, they will issue shares, and the member of Nidhi company deposits are to be taken. Deposits are to be taken, yes. Deposits will be taken. So they will generally have these, this payment plan. That is how it will be done. Nikhil, great. Is Nidhi company, see what Sai Darshini, remember, Nidhi companies, everything is important, especially when it comes in company law and this. Don't leave anything. When you have asked, I've done this, nothing will come outside. Just remember the head points, the points, it is more than sufficient. Okay, nothing will come outside than what I'm doing. Okay, first write this and conclusion. Okay, so that is it for today. I take a leave. Now I just request 2-3 things for you. If you've not taken the dream batch, your friends don't know, please give a shout out, inform them, you subscribe. I'm trying my level best to reach all of you all. Okay, so I've finished this type of company. You see in company law also that chapter has got over, and even your setting up this company has got over. Tomorrow I will start with this particular topic, MOA, AOA and alteration and doctrines. Now again, when I finish this means it is completely done. There won't come even a single question outside. You've seen your entire module is covered from what I have done. Okay, so that is it from my end. Okay, Tarini, the notes are gets unlocked with the full course access. That is why it's not given. Okay. Yeah, so yeah, even don't worry, even whatever is not there in the dream batch, I will make it a point to cover it in the particular this in the marathon lectures. Okay, and also if you have not liked the lectures, please like the lecture, because sometimes what happens, it demoralizes. See, I'm fine, I understand, but some faculties are there, they are wondering that students, we don't come to know a like is, there's no monetary value to a like or subscription, whatever you do. But what happens is, to the faculty it's a form of an encouragement, one, and we also come to know that the students are liking the lecture, so we feel more confident and more happy. Okay, or reverse also, if you are not liking, you're watching but not liking, then as a human you feel you don't know whether you're doing a good job or no to reach out to the student. So make that point of conveying it to the faculty that yes sir, you've been helpful, not to me but at least Fatima ma'am has taken such long lectures, made so many notes for all of you all. At least you all can write later on into the comment section or the liking the video, or so that makes thing, because Fatima ma'am was like, I don't know, student did not like, you all might not be realizing, but those things are is a little way of motivation for us as well. Okay, so that is it. Thank you so much, all of you all, and don't forget, even for tomorrow's lecture, for ma'am's Fatima ma'am's lectures, be there, communicate to her also that you all are liking it, so she feels more happy and knows that she's reaching. Okay, Nikhil, thank you so much. Tarini, great. Vidya, great, thank you. Yeah, thanks, Gupta, Mr. Gupta, thank you so much for your time. Your job is to go ahead and study your balance part of the chapters. Setting up, I leave it to me. Whenever I'm doing whatever I do, you finish it. Leave the stress. In my marathons, if you noticed, I'm covering everything. Whatever I do, I'll finish off everything. All you have to do is perfect it when I have done it. And don't delay, I'll do it tomorrow, I'll do it day after. That is a crime. Okay, don't do that. When I've finished it, your job in the next 2 hours is to perfect whatever I have done. Don't delay, procrastinate, because it's fresh. Make down your short notes and rest leave it to me. Okay, thank you so much, Shubh, Jayanti. Okay, yeah, so notes, I mean, for the students, I will put up for the full course who have enrolled. I will put up, they will have the notes. Everyone else, I've made it from the module, so just in case you can refer from the module itself. Okay, yeah. Sai Darshini, thank you so much. Just if on the message also tomorrow, ma'am's lecture will be there. She'll feel very happy because she was telling me I'm not sure. I said no, it was a very good lecture. Sometimes they fail to communicate to her. Okay. Yeah. Okay. Shri Nidhi, thank you so much. I'm so happy you found Nidhi company easy now. Okay, Jayanti. Okay, this is from the module. Just take it and finish it from the module. So I'll take a leave. I don't want to take more of your time. Thank you so much for your good wishes also. I will be again day after with setting up with the topic I've given, MOAOA. And you all have to come tomorrow at Fatima ma'am. She starts on time. 11 also she will start. She has made a particular past exam questions and all those notes. You can go and study it also. Okay. Okay. Yes, I will try to put in this timestamp later. Thank you so much, guys. Don't want to take in more time. Take care, guys. Bye.